So, hello and welcome to Commercial Property Alliance. Today we have a very hot topic, how to value commercial property with Prash from Blue Alpine. So I've basically known about Blue Alpine pretty much as soon as I started Ranjan's course. I sort of found them. I found that they were good agents with a lot of stock basically, and a variety of different units, either for sale or whether that is commercial with development or a residential element to it already there, or with PD attached, or even just on a yield play. And I sort of have kind of gone on several viewings with them. I've probably met Prash sometime last year, actually, when we did a couple of viewings on some sites. And when the group asked for property valuations, straight away these guys sprang to mind. Part of the reason is because typically what you'll find with a commercial agent is that they're located in a certain area. And what I love about Blue Alpine is they are up and down the country. So they have experience in putting stock on the market up north, in the south, you name it, they pretty much have stock from all over the UK. So that's why, for me, these guys are, are good to basically have come and talk to us on this topic and help us get to grips with how to value commercial units. So on that note, I'm going to hand over to Prash, and he's got some slides that he'll share with us.
Excellent. Let's see. Right, so I'll take over. Can you guys all hear me? Is it clear?
Yep. Mm-hmm. Yep.
Okay, great. So as I said to you earlier on, I've kept this sort of very simple but easy to digest, and I've left more time at the end so that you can all ask me questions or any specific topics on specific properties, and we can see if we can assist you on them. Now, if I can't, I'll just straight away tell you I can't, and one of my team will be able to, and we'll be able to get back to you afterwards on an email or something. So let's take a look at commercial property and this webinar, and why we've decided to do this today. Mainly because it's an absolute pain in the backside, commercial property, and most people that are looking at, hang on 1 minute, Elena, can I see, is there any way to expand this? I've got you here. Oh, there you go. Yeah, I can see a few of you now. Okay, great. Yeah, so the reason why we looked at this is because it is an absolute pain to value individual commercial assets, and some people that don't understand it or have done residential before sometimes get stuck and confused with how to value that exact portion of that commercial building. So I'm pretty sure most of you are familiar with residential and how to do the comps and everything, similar sort of stuff. So we're going to go into slide 1 first so we can see it here. So if we look at slide 1, and I call it method 1, which is rebuild cost valuation. In this one, we're looking at the rebuild cost of the ground up value. So we take a building, we demolish it, and we work out a square footage, pounds per square foot basis to rebuild that building. And most insurance companies will always ask you, if you're buying any, I'm sure most of you have bought buildings, or if you haven't, then a commercial building will always ask you for a reinstatement value. That's what we're referring to here. So the ground up value. So you take the building, square footage, and you put £1 per square foot on a rebuild value. If it's £200 a foot or so on, whatever, you add that value onto it. Now, the reason why this is important is because you've got some buildings such as grade 2 listed buildings, heritage assets, complicated buildings and difficult to value. These buildings will use this reinstatement value to value the building, because it's hard to find comparables. It's hard to find, some of them don't have any rates with them. So it's very difficult to understand that exact value of that building. And to be honest with you, even if you did have a rateable value to that building, it doesn't exactly state the value of the building, because it's a heritage building, which means it takes a lot more work to do. So to put that value, you would always overinflate that price, and that would give you a more complicated building such as grade 2 listed or any heritage asset. That will give you the value. So if we move on to method 2, which is similar to what you do in residential, and this is called sales comparison value. So basically market value of that building. Now, we're going to look into all these in a bit more detail in a minute, but we just take an idea of what market value means. Market value is not the same as residential. So it takes the fair market rent of the place, the rateable value of the building. Sorry, can you guys hear me still?
Yeah.
Yeah, and auction data. Now, this is probably one of the most important things here is in commercial, majority of the buildings sold in commercial are either sold through, obviously, private treaty through agents like myself, but the large proportion of them are actually traded in auction. Now, I'm not doing myself any justice by telling you this because I'm an agent and I want to take all your properties and sell them. But actually, the funds, the large operators, such as large property companies, and obviously any probate, as you would do with residential, will sell through auction. So the biggest data point for us is the auction to grab the information in comparables. So let me just get back to here. So to get your similar property value, it's important to get the exact comparable. Let's say, for example, you've got a building in Cheam or Epsom or Pinner. Taking a building that is in Harrow, in Harrow Wilt, will not be the equivalent comparable. It has to be within a close proximity with a similar makeup of that building. So we're going to go into a bit more information on that in a minute, but let's move on to the next one, which is income, yield, and gross initial yield calculation. Sorry, I've got calls coming in at the same time. So this is a pretty standard way of valuing any commercial building, and I call it the fag paper calculation, or pick up the phone method, because you really want to actually pick up the phone and speak to agents on this valuation method. And it's really important because it's not just about a comparable. This is also about the yield generated on that building. So the predominant focus on this is exact yield and income received on that building. Now, this won't be relevant to all of you guys because a lot of you will be looking at development, but it's important to understand. So the first thing you need to consider is your commercial value. So you've done your comparables from the one above. You've worked out that this building has an average rent of X, Y, or Z. And then you then take that building and you divide that. So if we say here, I've got an actual comparable, if we go just over here. So let's take an example of £500,000 for a purchase price of a property. We take the total rent received, which is £70,000 on the building. And then we take that and we divide it by the £70,000 by the £500,000. And that gives us an average yield on that building of 14%. So it's a really simple, quick valuation method, but it will give you, and it's not an exact science. This is just a method to quickly identify a building that you like from a building that you don't. But it is a really important one that all of you guys should keep in mind and carry on using. Okay. Sorry, on this last point, I forgot to mention these important things that you need to look at within your lease, because that will set your value. So the key considerations are probably going to be your lease strength, so your strength of your covenant, your potential increases in that lease, your break clauses, and any onerous legal clauses within that lease. So by that, I mean, in some buildings we've seen in the past, so for example, if you own a Tesco's, they may put a restrictive covenant to say there's a non-compete clause in that building, which means you can't now change that building to a similar use of, in those days, it was an A1 class, use class, but now obviously it's gone to E. So they restrict the trade of that building. So these are the important points here to work out your gross initial yield. So moving on to rateable valuations and zoning. So I'm sure a lot of you know about rateable value, and it's one of them, I think it's the most important thing when working out the value of a building. So as you all will probably know, that you look at a building and zone A, which is obviously your most valuable space. This is the front of your building where your windows of your shop are. So if you have a corner building, it'll be the side of the front. If you have a just on a high street building, it'll be the front of your building. Then every 6.1 meters down, which is approximately 20 feet, the building then halves in that value. So let's say, for example, you have a building that's £10,000 for zone A, or it would then go down to £5,000 for zone B, and so on. So you always half, half, and half. So when you're looking at a mixed use building, by taking away your zone if you're going to put some flats at the back of the building, you take away zone B and zone C, then you've still left yourself with the most valuable part of that building to re-rent out again. So that's where a lot of developers are now moving towards a zone, taking out the rear part of a shop and then converting that to residential, which I'm sure a lot of you have looked into. So I don't know if you guys can see over here, the right at the bottom, it says the principle of zoning here. So if you take two buildings with exactly the same square footage, but one has a larger shop front, that one is more valuable. And that's important to put down. So we take the same, so this is an example of a shop, just any shop. I've just made these numbers up, so don't run by them. But if you take a building A, and it's 1,000 square foot, and the average, we've worked out that by checking our comparables, and we've worked out that the average square footage in that area is £20 a foot. The average, so the rent works out to £20,000 per annum for that building, just commercial element only. And the average yield we worked out in the area by checking out the comparables in the area is 6%. That works out to £333,000. We do exactly the same thing, but we change that square footage to £5 more per foot, which is £5,000 per annum. At 6% yield, keeping the same yield, we've now made ourselves a profit of £83,000. So it's a very simple way to add value to a building. So you identify a building that's being sold for less per square foot, add a simple new tenant in, and you've now made yourself a quick £83,000. So I'm going to show you an example of this here. So this is a property which we recently did on 21 High Street, Purley. So I put a 999-year lease here, and we've spoken about this before, that 999-year leases are probably not the best thing that most people are trying to avoid here. But actually, when you're looking at solely commercial, it's quite interesting because they fit into a SIP or a SAS, depending on what your pension scheme is. And also, if you take a vacant building, you can actually add a lot of value to them. So this was a vacant building. The High Street had Boots and Ladbrokes. Next door to it was a vacant building. It was acquired in auction. The upper parts were residential. The building had, if we just go on to the next slide, you'll be able to see, the building makeup was 1,027 square foot, so 94 square meters. The rateable value was £21,000 per annum. We did some checking and it gave us the £21,000 rateable value is not set in stone. That doesn't always mean the rent is equivalent to that. So in this case, it was because there was demand was high in the area and there was no vacancies. So if there is a building and you have a lot of vacancies in the area, even if the rateable value is high, you have to be very careful and rely on your comparables for that and speaking to local agents. So in this case, it was 21,000 was the correct market rent. The EPC was B. Now in commercial, as you guys probably know, if an EPC is E or below, then it is not mortgageable nor is it lettable. So it's really important that that EPC comes back at a reasonable level above E. In this case, we're a B, so we're pretty safe. The building was not elected for VAT, which means you don't have to pay any VAT on a vacant building. This is important for vacant buildings because if you acquired this building and it had no tenant in it, as this one didn't, then you would be liable for the VAT on the building. If it's not elected for VAT, then the VAT is not liable on that building. And it's held on a 999-year lease. I can't see, and it's a ground floor lock-up shop. So let's look at some numbers on this one. So let's assume that you've checked the square footage yourself with a measure tape or a laser. So you know that this building is now actually 1,027 square foot and you're not relying on the rates calculator because they are wrong many times. And actually auction particulars are not always correct as well because a lot of them take the figures from the rates from the government website. And it's not always correct because the valuation office doesn't go and measure these things regularly. So it's really important you check this for yourself. And we did on this one, and it was correct. 1,027 square foot. The rateable value again, here was the market rent was 21,000. and the average yield in the area, we did some checks and it was 5.7%, circa 6%, and that's an achievable rent. So in this building, that gives us a £368,421 valuation on that building. And the way we came up to that was simply taking the rent achievable divided by 0.057, which is the yield. And that gave us our valuation figure. So this is that fag paper calculation I told you about before, which gives you a rough, quick analysis to understand. Sorry, I've got a question here from somebody. Let me answer that. How do I get the questions up? Does anybody know?
Prash, we'll cover those at the end. Don't worry.
Okay.
We'll do them.
Great. So anyway, so that gives us the building valuation, which is, like I said, a quick valuation, but it also gives you an understanding that what the local comparables are in the area, what the square footage is, and you now know what the average yields are. But then you have to go into a little bit more detail on this and reverse engineer those calculations. So we used method 1 and 2 above, the ones I said above, to work out the comparables. We now know that the yield is 5.7%. But you also have to reverse engineer this, because if you just do that calculation alone and you've worked out that the £368,421 is the correct value, you can't be 100% sure of that. So to work that out, you go back and you do your pounds per square foot value. So you know your building makeup, you know all these figures now, and then you do a calculation of the rent minus divided by the square footage of the building. We just had another question. All of them is the answer to it. So you take your 21,000, you divide it by the square footage, and that gives you £21.44 per foot. Now that's the rentable value in the area. This figure is super important, because if the average area is £25 a foot valued at, then you know you can make £5 a foot extra, which is where all your value is going to be. If it's only £18 a foot in the average in the area, then you're not going to ever achieve that, and you've overvalued your figures. So this is a really important figure, is your rental value on this. And that's your average rent in the area. Then you do the same calculation that you would probably do on a residential build, where you take your purchase price or acquisition price or valuation price, and you divide that by your square footage, and then you have your pounds per square foot. And this is another really important figure, because all these three figures at the bottom are important. So to give you your first figure and to know that that's the correct figure, you must do those other two calculations to work out your pounds per square foot. And I'll answer those questions in a minute. To work out the average pounds per square foot. So that £359, that's circa £359, is that in the area? Can you get £400 a foot? Can you get £300 a foot? That's exactly what you really need to know for that calculation. But without working out the first bit, you'll never know the last bit. Okay, and then if we move on to the next slide, and I'll answer all these questions afterwards. So yeah, keep them coming. Okay, so Epsom. So we sold another building in Epsom. So this is 30 and 35 High Street, Epsom. So this is probably going to be one. I've kept this really brief. This is the last one we're doing. So we're not. It's not that long, as I explained, but we're going to go into some question and answers afterwards. So okay, if you think about a shop in Uppers, and this is what you're probably all interested in, and I've left this one because this is a tasty little bite at the end. So this high street shop was an occupied shop on Epsom High Street in Surrey, nice location, good residential values. The shop was occupied when we took it on. The tenant then ended up vacating. I think he came up to the term of his lease. The original value of this building was £575,000, and that's what the client was happy to take. And he would have been ecstatic with that price again. He assumed his shop value was 16,000 was the correct market rent. When we stepped in and did some analysis and worked out using some of the methods that I said above, and using some of the softwares we use as well, which I'll discuss with you guys as well in a moment, we worked out that the average rent in the area could be up to £20,000. So the flat was at the correct market rent, which is 13,800. Gave him, and the gross initial yield on this was 5.18%, which was about correct for the area again, which gave him a total rent of 29,800. we got him a new letting on the shop at 19,000 per annum. That is the only change we made. The yield was still around 5.2% circa, which was an annual increase of just £3,000 a year, which is palatable for a tenant as well. So it's important that you do the correct market rent. And this was palatable for the tenant, and also the landlord was happy with that. And that increase gave him a £50,000 increase on the building. And then keep it in mind, this is all within a short space of time. So let's take some things to consider when looking at, and we'll go into a more detail while we're discussing this in a moment. So really important things to consider when looking at these commercial properties is the tenant in occupation? We all know it may seem that way and you may read it on a catalogue, but if you don't get there and see it, you don't know. So it's really important. We need to look at the market rent being received. Is it correct? Is it too low? Is it too high? Because if it is too low, it could be worth a lot more. If the rent is too low, you could actually increase that rent, as we just showed you just now, and increase the building's worth. And if it's over rented, then that's also a problem, because this can be reflective of the next rent review that you set. And when you have that rent review that comes in, say for example it's within a year, and that's not an upward only market, it's a market rent review and not an upward only rent review, then you could be stung by a downward rent review, and your building could be worth a lot less. So you have to be very mindful of those facts. So when looking at a mixed use building or multi-let, you obviously have your residential and commercial value, and you add them together, and then obviously you know that that's the value of your total building. But a lot of people don't consider the breakup value of that building. So because commercial being so complicated to work out, you might see potential value in just buying a shop and uppers. And in some cases, we've seen the potential shop and uppers being sold, and the ground floor being sold off separately, and the uppers being sold off separately, and they end up making all the money on the ground floor, all their profit on the ground floor. So you have to look at these values as well that are important. So at the end of the day, I mean, looking at all investors that we deal with, sorry, I've got calls coming in. At the end of the day, all investors value things completely differently. And this is probably one of, I've shown you 2 or 3 methods that we use within probably 20 different ways to value commercial buildings. But the most important thing is that it's a subjective thing. It's all what somebody wants to pay for it. And that's why I love looking at auction comparables, because auction comparables tell you what the individual wanted to pay for it. And not in all cases, but in most cases, that will give you a true indication of what the neighbouring property sold for and what the values are going to be. So most of the investors I know, and the really seasoned ones, have honed their skill on exactly identifying this. And actually what they do is years later, they don't actually need to understand or look at comparables and evidence, because they know what that value is, and it's constantly changing. So it's important to identify and hone your skills in that area. So just having a look at a couple of things that we've done recently, and a few buildings that we do, so you guys know exactly what we do before we go into some questions. We sold this building, so we acquired this building on behalf of a client, and it was for 27 garages. This building, we then managed to get planning with a lot of our help on this as well. We bought it at 430,000, and then we exited this last year, the end of last year, at £1 million. So that's one interesting site that we looked at last year. This is generally the kind of things that we sell on behalf of clients, which is mixed-use buildings, shops and uppers, dental surgeries. It could be any sort of commercially led building, I'll call it. We even got a lot of HMOs coming in. This is a bit of information based on our competitive analysis and where we sit in the marketplace right now. This information's come from Riella, which I'm sure a lot of you guys use to find your stock. Riella is an online portal. Currently, if you see the top from the top, our stock list is about 110 properties on Riella. We're probably sitting on about 140 properties, somewhere about 140 properties we're selling on behalf of clients, not counting any off-market and trading stock. So this is active deals that we're selling on behalf of our clients that we're retained on. So we sit somewhere between DM Hall and Allsop on the list of available stock. Keeping in mind we're a boutique we're a boutique business that has 7 employees on it. And we work really hard to deliver trust and transparency for our clients. There's my contact details if any of you want to take a look. I apologise for my COVID hair. I haven't had a chance to have a haircut. And there's my contact details. And last but not least, if you guys want to, I think we're going to offer a free 30-minute Zoom call or phone call for anyone on the Property Alliance space here to discuss any specific property and in more detail. So we can have a talk right now about things that are general, but if you want to discuss your specific needs for your property, we can help you understand and analyze your stuff for 30 minutes, sit down. There's no obligation there. We're not asking for anything, and we don't want anything. This is for the Property Alliance guys that here. We can help you out and see if we can add any value for you guys or help you, ascertain any value add opportunities within your buildings you currently have or you're looking for. So that's sort of the basic roundup of what we've got to say. So should we open up to having a bit of a chat now?
We will. Thank you very much, Prash. That was excellent. I think that's definitely generated a lot of questions in the chat. So what I'll do is I will start to ask some of the questions in the chat. And in the meantime, if basically anyone wants to kind of raise their hand, then we can obviously just answer any more questions as well that people might have as well on that.
Lockdown's a lonely place. I'm happy to speak to anyone as well. I can't be on my own.
Yes. So the first question that we have is from Craig. Some buildings are locally listed rather than English heritage listing. Does that affect the valuation as per method 1?
Funny enough, Craig, that's actually an interesting point, and I have actually been dealing with this as we speak right now. And it's a complicated answer to this. If you have a specific property, we'll have to look at it specifically. But the long and short of your answer is yes, it's a complicated subject to discuss because locally listed buildings are not as difficult as Grade 2 listed or any heritage buildings. But the valuations are complicated because I'm dealing with one in Streatham on behalf of a client actually right now. That's locally listed but not Grade 2 listed, which means essentially the development's going to be very difficult to get done. Now, keeping in mind, Heritage England don't have any hold over this building. This is purely the council who think this building should be of historical nature, and therefore they should. They put a locally listed, it's like a bit like a TPO. It can be removed. It's hard to remove, but it's probably better to convert. So valuation wise, it's very difficult because comparables are very, very hard to get hold of on them. Then in that case, you would use a rebuild cost valuation there and alternatively use a zoning price if it's a commercial building. Does that help? Does that answer the question?
Okay.
Yeah, that's great. Thanks.
If we don't.
Yeah. If you want to talk about the building specifically, feel free to reach out to me.
Okay, then could you please elaborate on when VAT is not elected? And that comes from Anna.
When VAT is not elected. Okay, so VAT is an interesting question. I didn't go into detail on this, but I can have a whole webinar based on this. It's its own whole topic. Okay, so when you have a commercial building, the commercial building from the day of origin or at any point in that space can be elected for VAT at some point in its life of that building. So let's take a shopping uppers. Let's take my example back here in, let's see if we can go back there. Oop. Let's take this example here of Epsom, High Street Epsom. Let's say this building is VAT elected. At some point in its life, it had been VAT elected. And let's take the picture number 1 here specifically. And that building is VAT elected and there's a tenant sitting in the property. In that case, you would apply for something called a TOGC, a transfer of going concern. And that would mean that the VAT is, the HMRC do not charge you VAT on that building. It gets passed forward directly to HMRC. Therefore, there's no VAT applicable on that transaction. It gets passed forward. If the building does not have VAT on it, which let's take example number 2 here. Let's say that was a different building and it didn't have VAT on it and it was vacant, then no TOGC will be required. And if the building was occupied, again, no VAT will be required to be paid. Now, if the building did have VAT on it and it was unoccupied, you would have to pay the VAT as part of the transaction sale. So when you purchase the building, it would be whatever, 100,000 plus 20,000 pounds, and you would have to pay it. If the VAT was, if an occupier was in the building, you would not pay that VAT. You would simply do a transfer of going concern. Does that answer the question?
Yes, thank you. I was specifically, can you hear me? Sorry.
Yes, I can hear you. Yeah.
So specifically, I was interested in the situations when the property is vacant, basically, because I thought it was that VAT is always applicable in that case. But you say
It is,
because the
is.
VAT was not elected. So where you find this information? It's going to be in the brochure, right? Where when you buy it from the commercial agent, so you're gonna.
When you buy it from great agents like myself, yes.
Yeah.
But yeah, it's all dependent. So most of them should put that information in, unless the information is not available to them. So every agent will have a disclaimer at the bottom saying that, you know, if the information is not correct, you'll find out at a later date, and therefore they're not liable. But in our case, we try and look through every lease and find out that information, or every freehold title. So we try and find out that information. If VAT is applicable, you'll be able to find out from the agent. Yes, they should have. In most cases, they will know, because the previous landlord should know, unless it's a derelict building that, you know, it's gone to probate or something more complicated. But in most cases, you will know if there's VAT on there by asking the agent.
So most of the cases, that is from my experience, when I search for properties, there is nothing. It's written that it might be applicable. So it's most of the cases, it's actually not clear when you look just at the property, at the brochure, or, you know, online.
So as I said, if you go to my website, every single one will be listed, and it will be on there whether it's VAT applicable or not. This is a pet peeve for me. I really don't like it. If VAT is applicable, it's a really important thing.
It's a huge difference in price, of course. Yeah. Just
Absolutely.
how you identify a good agent, right?
Yeah, they're
Exactly.
basically covering themselves, Anna. They're basically covering. They say it might.
It's a disclaimer.
Yeah,
it's a disclaimer.
So we were going to do. We were going to actually do that. We were actually going to put those on there, and then we made an active decision not to. So what we do is, if you see one of my property pages, if you go back to that pearly one, I mean, if I can, you'll be able to see every single information is on there. So you see VAT VAT applicable, it says no. If there's a tenant in there, we go into the lease. We will identify the term of the lease. We will input it. We've created an algorithm in the back of our website that we put in that information into it, and it will then dwindle down that date. So if you've got a date on there that says 5 years and 7 months left on that lease, ours will say 5 years and 7. After the date of, say, it becomes 5 years and 6 months, it will go down to 5 years and 6 months. So you'll get the accurate information, which a lot of people don't give you. You're absolutely right. They're trying to cover their back to make sure they don't misrepresent.
Perfect.
So
Thank you so much.
If there is, so if it is empty and there is VAT to pay, there's nothing you can't delist it or anything like that.
So VAT, the only way to get rid of VAT is by paying it off. So if you want to stop that VAT on that building, then say, for example, you're not doing a development and it was a vacant building, then if you pay the £20,000 to HMRC and then unelected for VAT, you can do that. But you're never going to see that money back again. Yeah. So what you would do, there is a way to redo. So let me give you a couple of pointers here. Okay, so say you do have a building. Let's say, for example, the building we're looking at behind on the screen, and that building is let's call it £300,000 for argument's sake, and let's call it £100,000 just for easy numbers. And there's £20,000 of VAT to be paid. If you set your completion date to your quarterly VAT return date, and you then pay the £20,000 because you cash flow it, or a bridging loan, in that next quarter, you're going to get a redemption of that £20,000. Does that make sense from HMRC? So what you do is you align your date of your completion with your date of your tax return for your VAT, and then you bridge that gap if you've got the cash, or you arrange to have that cash. You pay HMRC back the 20,000, and then you reclaim that back, and then you pay that, and then you've got that 20,000 back again. So it's like a short-term bridge for that VAT.
So just to clarify, you yourself will have to be VAT elected in order to claim that VAT back.
Correct.
Yeah, and the reason why a lot of shops are VAT registered in the first place is because the tenant was VAT registered. So if you have an empty shop and then say, for instance, a Greggs come in or a Costa, all those big guys, they pay VAT. So that therefore the property then is elected for VAT. Do you understand?
Yeah, it's just at any point in their life, they would probably want to have been elected for VAT, absolutely. And especially if, I mean, in some senses it's beneficial. If you've got a development to play on there, then you can claim all your VAT back on the development. I mean, it's a VAT election is not a bad thing. It just depends on cash flow position and what your plans are for that building. But absolutely, you're absolutely right. You have to be VAT. Sorry, I forgot to mention that. Really important. Thank you for reminding me on that. You have to be VAT registered. Your company has to be VAT registered in advance. Now, it's doing a VAT election is not. It doesn't take a long time, but as we all know, with government, the governments take a long time to do anything. So you don't want to be stuck in between a rock and a hard place. So it's very important your company. We always keep a company whenever I do my own investments or developments. I keep a company for VAT separately and a company for non-VAT. And all my VAT properties go into a VAT company, and the non-VAT ones go into the non-VAT ones. And then you have to do quarterly returns as well. Obviously, your accounting fees are going to be higher, and these things you just have to factor into your projections.
Sure.
Yeah.
Okay.
So it means that if you are VAT registered, once you get a tenant, that tenant has to pay VAT.
Correct.
So that's why Prash has two different companies, one for VAT and one for non-VAT.
Correct.
Okay, let's move on because we've got a few more questions. So Amina is asking, which of the methods do you use as an agent to set an asking or guide price?
Elena, before you move on the VAT, is it the landlord that elects it for VAT or the previous tenant that elects it?
The landlord, the landowner. Yeah. So it might not necessarily be a landlord. That's why I said landowner, because it's the freeholder. Because in the case that we've got behind, it's a long leasehold, so it's always the landowner.
Okay, so Amina asks, which of the methods do you use as an agent to set an asking or guide price?
This is as you said, this is a crazy one. There's so many different methods, and it depends on the type of property. So that's why I narrowed it down. And Elena knows this. We discussed this previously. I could have given you examples of loads of different buildings, and sometimes it's too much to handle to value them. Now, one of my colleagues, my business partner, Mitchell Puppet, he does all our valuations for us and sets the values. He uses a lot of the methods above. And the ones we generally use to value them are comparables, auction sites for similar buildings, and the most important two that I alluded to earlier on, which is your average pounds per square foot in the area for rentable pounds per square foot, and your average saleable pounds per square foot. They're the two important figures that you need to work out what the values are, because if there's no point in you selling something at £400 a foot that you're never going to get when the neighbours are all selling at £300 a foot or sold in the recent times. But that then you have to look at different methods. I mean, that's why I said it's complicated, because if you have a KFC, let's take a KFC for example, or Greggs as we discussed, and you have a Greggs, that's a different valuation to a local covenant. Let's say, for example, this Greggs or KFC nationally sold at 6% or 5%. Let's say, for example, they sold at nationally at 5%. The areas matter less, because the comparables are the other KFCs that have sold, because you're not buying just the property, you're buying the lease in that sense. So the comparables are slightly different. When you're looking at an independent, then the leases are more to do with what's locally there. And when you're looking at a vacant building, then it's purely pounds per square foot and the rentable potential for pounds per square foot. Does that help?
Yep.
Yeah. So can I just add on to that? So just for guys to understand, when you have a strong covenant, i.e. a national brand, the yield is normally lower. And if you remember, the lower the yield, the higher the value. So basically, yield is about risk. So if you've got a national tenant, they see it as less risk, so you're paying more for it. So that it will be a lower yield. So the lower the yield, the higher the value. If you just remember that.
Yeah, but I mean, I would also say that that's absolutely correct. But nowadays, in my opinion, my personal opinion, this is just a personal opinion, that, you know, the blue chips aren't as, from what I'm seeing and the rent payments that they're coming in, they're not paying their rents the way the local covenants are. So strength is all again subjective. The reason why those yields were low and they were depressed is because those yields that were coming at 3%, 4%, and 5% for national covenants were known as to be strong, and they wouldn't go anywhere. Hence why those yields were so low. But nowadays, I'll be honest with you, the local hairdresser and the local guy running a convenience store, he's paying his rent and he's not complaining.
Yeah,
and he's working.
This is different times. This is
absolutely
crazy.
That's
times.
what I meant. I mean, that's the caveat
Yeah.
I would put. I was absolutely 100% with what you said, and I agree with that. I just think in the current times, nothing is 100% certain. So if you're investing your money into it, I would definitely think about looking at more local covenants and essential shops. I actually just recently did a webinar for our solicitors on this, and it was about use classes, but we decided to veer off that topic for today. But yeah, that's again another whole topic in itself. Anyway, moving on. Have you got any other questions?
So if you don't have any direct comparables in the area, do you just identify the closest one possible?
There's always comparables. It just means you widen your search, right? So if, for example, there's no immediate comparables to the left or the right, or you've got a shop, let's say in a rural area that doesn't have, let's say that shop is on a corner building in the middle of nowhere, and there's all housing around it, and you're not going to get a direct comp for that one. Then what you then do is you widen the search, and your comp is now the one which is the nearest one. So you just open and widen your radius, and you find something that's within that local area, and then you use that as your comp to say that's what's sold, because that is what's sold, and that's set the value then.
And how do you get the average rents in the area? Is that just calling a few different agents? What's the best way to do that?
Yeah, good question. There's various methods. Let's say the 101 beginning sort of easy way to do it and free and cheap is purely going on all of the sites, like Riella, Rightmove, all the rest of them, and having a look at what's there recently. Having said that, people overinflate their prices, and you don't know if that's actually what they've sold for. So I would suggest picking up the phone. That's why I said the picking up the phone method, because I had maybe 3 or 4 calls today from JLL. I had one from Colliers. I had one from Knight Frank. Yesterday I had one from CBRE. These are the big boys. They're calling me to ask for comps because they don't care. There's no you're the big boy, I'm the small boy. They just want to know what's sold and use that comp to value the building. And they're doing red book valuations. Now, everything we've discussed today, this is not a red book valuation. That's a whole another topic as well. But what you get from your red book valuation, which is what the banks value your buildings at, is very different to what we're discussing today. This is an investment value. With the red book valuation, this is what they're calling me up for to get the comps. They're calling me up to say, how much did you sell that building in Epsom for? How much did you sell that building in Purley for? And what did you sell it for? Has it completed? Has it exchanged? And they're going to then use that for their comparables directly. So if they're doing it, if it's good enough for them, it's good enough for you guys. Because think about it, they're always going to put the lowest value on those buildings because banks like to have lower values. They always want to protect their position. So you guys can protect yours as well by doing exactly the same. It takes a bit of effort, but you know what? Making 5 phone calls is better than paying for, softwares that could cost you £2,000-3,000 a month. And it gives you the same result.
Great. So Craig is asking, can you explain about the calculations when people use the ITZA methodology?
I knew someone was going to bring this up. I literally have, Craig, I like your questions today. I literally have ITZA on my paper there. Okay, so ITZA is Zone A. That is what it refers to. So let's go back here. So this section here that we speak about over here, Zone A, that is all ITZAs. So what it does is anything closest to the window is counted as Zone A, and Zone A is the definition for ITZA. So what did he want to ask about it?
So he basically just said, can you explain about the calculations that people use for that methodology?
So the easiest way to work that out, and the least complicated way, is simply go into the rates valuation. So if you type in rates, business rates with the property address or rates valuation, it will come up with a link. I can send it to you guys as well, to the government website. On that website, they will give you all the breakdowns for each of the properties. They'll tell you your valuation, they'll tell you historic valuation, they'll tell you your They'll tell you your individual zones will be listed there as well. And then obviously my suggestion earlier on was you should always measure up as well. If you're buying it, then you measure up, then you know that those are correct. Once you know those are correct, you apply the same calculation they've done, which is normally like £300 a foot or £400 a foot, whatever their valuation is. And that's how you come up to your calculation. You can do it individually. And again, you use your comps nearby of local properties that are sold. And then you use that, as I said earlier on, zone A, which would be your first 6.1 meters. Then zone B will be your second 6.1 meters, zone C and zone D, and so on. And each zone will be halved. So you halve the zone A from the zone B, and then zone B from zone C, and so on till you come up to nil. You minus off any toilets and any other spaces that are not usable. And they come to zero, you don't value them.
Great. And then Ed is asking, what's the general feedback from sellers when a buyer requests VAT to be removed? So the option to VAT.
The option to tax. So,
VAT, yeah.
Sorry, can you repeat the question again?
He said, what's the general feedback from sellers when a buyer requests VAT to be removed?
I've never had the question approached to me.
Yeah, they can't ask for it to be removed unless the VAT is paid, Ed.
Exactly.
Because it's empty. They can't ask for it to be removed. They can't remove it unless the VAT is paid up.
Okay.
Yeah, so the VAT cannot be directly taken off. It can only be paid out and completed. So when you've paid it, it's gone, or you on that building, or alternatively, it's elected for VAT. But I think the question was probably referred to about how do they feel to for you to pay it. Is that what the question was, or?
I think it was more just around if you could get it removed, you know.
Well, it was about the VAT 161A form, like, you know, the one that Ranjan talks about. It seems to be quite an odd one now.
Oh, right. That's not the vendor. That's you would fill in that form. So that's when the property is actually tenanted.
Right.
So you think, then you fill in that form and send off to HMRC. It's not the vendor.
No, that's the part. Yeah, that's a form that you have to do yourself.
So there's no way of getting around the VAT by the sounds of it.
No.
Not if the property is empty.
As I said, it's not always a bad thing. You know, if depending on what building type you're looking for, look, it's your choice to buy the building. So as long as you can come up with a strategy to make that a value add or a nil, or you know, make it equalize it. So for example, if you've got a tenant in there, you're not paying that VAT. You're just applying for the TOGC, and the other guy pays the VAT, and the tenant pays the VAT. In other cases, if you've got a building development, then you're quids in because you can claim all your building expenses back on VAT. So it's all relative to what. Don't think of anything as a negative. You know, someone once said to me, Prash, I would love for you to pay £1 million in VAT, because that means you made a whole lot of money. So you know, don't look at them as negative things. There's a way to capitalize on these as well. And remember, that means that less people are looking at it, and if less people are looking at it, more people are frightened, then there's a market opportunity there.
Yeah, I think my issue with it, because we found a place and we wanted to split it up and offer it out to smaller, you know, mum and pops type businesses, and obviously rent's going to be more because we're going to have to pass that VAT on to them. We're going to have to charge that to them. So I suppose we just got to factor it into our numbers, right?
Absolutely, yeah. I mean, that's a tricky one. That's exactly you've picked the one that's the most hardest one, because you know, it's individual operators. Some of them may not be VAT registered and they can't claim back. But what you could do is you could tell them to then. I mean, I'm not an accountant, but then they can go on the flat rate scheme, and anything above £2,000, I believe, any asset above £2,000 is claimable. But that you'd have to speak to your accountant about. I'm not a specialist in that, so. It's just about having knowledge and imparting that knowledge with these people. And a lot of local tenants, if you can help them out, then they'll make it work.
Brilliant. Yeah. And then Ed is also asking, how has the commercial rental market been in general with smaller shops on the high street, secondary parades? Is there still demand?
Yeah, the short answer is surprisingly yes for us. I've had probably several discussions with other agents. I'm in loads of other groups with a lot of the larger agents, and we have conversations like this all the time. And then everyone's doom and gloom, and there is a lot of that going about. And I wouldn't want to be having on my books, a 100,000 square foot unit or a shopping centre right now, because that would be difficult. But where we are is an interesting market. There's a lot of guys like you guys out there who want to buy and add value, and extract value. There's a lot of people out there that want to run a business, and I think, and this is just again my personal views, I think once furlough finishes, and once everyone's used all their bounce back loans, and we're in a position of real trouble, we're going to see a lot of people being made redundant. And what happens in those times, from my limited experience, and I started in 2007, so I saw the first crash for me happen. And what you find in those times is you find people decide to open businesses, and local businesses open up more. We have regeneration in areas such as like what happened in Shoreditch and so on in other areas. And then you see a lot of independents running their businesses, which is where I think we're going to be. And I think it's already showing. I'm seeing people still lettings have actually been quite strong, surprisingly. Don't ask me how or why, and I don't understand the methodologies. I wouldn't be renting a place in the middle of a lockdown, but people are, surprisingly. I'll see if I can get the numbers out from Joseph, one of my operations director and business partner, and he'll see if I can get what we've got. But we've got a lot of interest in letting right now for secondary and tertiary.
Isn't that dependent on the area, Prash?
But as Eleanor said, I've got 130 properties from as far as Northumberland, as far as Scotland down to Penzance, and
Right.
as far as Wales up to Norwich, all over the place, all over the UK. 130. I think it's probably about 150 to be honest with you, but 130.
That's amazing, considering there's so many shops that are closed down. That's amazing.
I can tell you which areas not that they won't rent in. Weymouth has got no interest in it right now. Don't ask me why. It's got no interest. So all the other areas seem to be renting, and even Wales is doing really well, which, years I stayed away from that as an investment, and I always advise people don't do it right now because it was very weak and but even there we're getting rentals. I'm not saying everywhere, and it's specific to the area. You have to draw down on your numbers, and you have to know that exactly what you're doing. But providing, as I said before, you hone your skill and you know what you're looking at. I'm not saying to do what we do, which is all over the country and look at everything. Just know your market and know it well enough that, look, for example, in an area like Cheam in Surrey, I can't even tell you how many people are interested in A, the buildings we're selling, and B, the rentals. Things that get flying out the door. All these ones I showed you right now, they all happened during lockdown. These two examples I showed you guys, they all happened in lockdown. We had tenants rented them. We had them bought in lockdown and sold in lockdown.
All right, let's dive for a few more because we've got quite a few questions still. What's the difference between yield and market cap, please? That's from Henry. So
market cap being the market value of the, I don't understand the question.
Market cap is the cap rate. That's the American term for yield.
Yeah,
so it's
so
the
he means
same
capitalization.
thing. It's the same thing, Henry.
Yeah.
Okay, and then Ed is asking, what's the type of businesses that have been opening up and occupying commercial units since lockdown?
Sorry, can you repeat that one more time?
So what types of businesses have been opening / occupying? So like, I guess in these places that are renting out, like what types of tenants are they?
That's actually a brilliant question. That's the $1 million question. You'll have to drop a bar of gold on my table for me to tell you that. Okay, so yeah, it's a good question and actually interesting. So obviously the shops that were always doing well, like the convenience stores and all of them, are always opening and closing and moving. Hairdressers have always been doing quite well. But during this time, we've seen cake shops open up. Don't ask me why. People want to bake, apparently. We've seen, what interesting new shops have we seen? Tanning salons.
Okay.
Probably because we're not seeing any sun. I think looking at what we're seeing right now is not a true reflection. So I don't want to give you a whole list of them. What I might do on that one is, if you want, I can work out what we've got and what's currently renting. So all this stuff that's in the safe zone, I call it, the COVID safe zone, will still be renting now, and it probably will do good afterwards as well. That's all fine, I think, like convenience stores, medical, investments, beauty, hair, all these ones are going to be good. I think I've got something actually from my last webinar, which with the facts and figures of that. So what did I have here? I've got hot food takeaways, convenience store, medical, self-care. That's the areas that have been doing good, and developments. Obviously, investment and development stuff has been doing quite well. But again, I wouldn't take that as you know,
Yeah.
gospel and take that, because at the end of the day, we're in a bit of a bubble right now, and you need to know your market afterwards.
Yeah, the main thing to look out for is whatever is Amazon proof and COVID proof. So you got your food, your convenience shops, your services, your experiences, anything that people can't get online. Those are the people that are going to do well.
Correct. Exactly. And the thing is, and I think that's exactly, actually, it's a great point, because I think that's exactly what we're going to see going forward. We're going to see all these new innovative businesses and all these gentrification happening in certain areas. And I think we're going to be looking at more of those kind of businesses. And if you're asking me where I would put my money, it would be into those businesses over the blue chips, because you just don't know with the blue chips now. And they're all going to use this as leverage to CVA or get out of their leases. Whereas the guys that need to operate their business, they've left their job, and they're just like you and I, and they all need the money in their bank to operate and run.
And then basically in terms of, so Greg is asking about VAT. So on VAT, it just, because I guess this is kind of a hot topic for everyone, he said if it's a direct to vendor and basically the vendor doesn't know, you know, what happens then. But I guess they should know, shouldn't they? If they own the building, they should know whether they pay VAT on it.
So just explain the deal to me. So the deal is direct to vendors, and your person A is purchasing it.
Yeah, I'll just answer it quickly. What it is, they will know because they have to charge the tenant VAT. So the previous tenant, if it's in their lease that they've got to pay VAT, you know that building is VAT registered. So the owner will always know.
Yeah, exactly.
Unless it's probate or it's back to back. That's the only way you can't do it.
Yeah. All right. And then any tips when making a winning offer other than price, and what else can help secure a site?
Well, I mean, look, so obviously everyone wants to say cash, but I probably get 20 people a week coming up to me saying, I'm all cash. You get their offer in and it's not cash, it's all finance. I'd say just be honest. Like my business is, and our business is all about honesty and transparency. I only want to work with people that are straightforward. You know, I've been in this business since 2007. I started buying property, and I've been through it all, and I've dealt with all the dodgy agents and everybody else. And I can't be bothered. I'm fed up with it. I just want to deal with people that are straightforward. So if you're approaching me, and I think this is an individual question to each agency. So, you know, you don't know if your guy down the road wants to take a few quid in his pocket, he's probably going to give you the deal. You're not going to get that from us. From us, it's going to be very straightforward, very transparent. Put your offer in front of us, and if it's genuine, then we'll work with you. And if you deliver on it, we'll carry on bringing you stuff and working with you, as long as it's honest and straightforward. I don't want to do anything that's going to be untoward, and that's the problem in our industry. And that's another whole topic for another day, but it's a big issue.
Great. And then Henry's asking, are these average rents per zone A to be comparable? Are these average rents per zone A to be comparable, please? I'm not sure if I get that.
I don't understand the question.
Yeah, sorry. Jump in. So when you're talking about getting comparables, Prash, is that just purely for zone A? I mean, how do you?
No. So the comparables are going to be across the whole building. So it will be the total rent per annum. So if it's a £10,000 per annum building, that is your comparable. Then what you do is you're going to divide that by the whole space, not zone A, B, and C, and that will give you average pounds per rental per foot.
Okay, so the shape as such doesn't really come into it for that.
No, the zoning is only important for two reasons: to make sure that the rent is being paid correctly. Sorry, the rental figure is correct. So if you want to know that your rent is actually going to be £10,000 and it's not £12,000, that's important to identify value. So zoning is really important to identify value and value add. If you're looking to convert part of that shop, again, zoning is really important, because you're going to cut off the maximum zone B and C. The lower down you cut off, the more value you keep at the front, the more value you still store on that building.
Okay, great. Thank you.
Great. Leo is asking, how should you be valuing mixed use commercial properties? Via your method or via local commercial agents? Are agents generally happy to help with this, and are they accurate?
Well, they're not accurate, that's for sure. No one's accurate. So that's why you've got to do your own research. I think when calling them up is great, because you can find out what that value is of that building, and most agents are straightforward, and if you go to the good ones, they'll tell you what their figures are. Now, valuing mixed use assets, that's a very simple answer, which is do everything we've discussed now to work out the value of the ground floor, and then the upper parts is the same way you'd value any building. So if you have a 2-bedroom flat, what has sold in the area? Now, what we struggle with, and I think a lot of people are going to struggle with, is when you've got shops and uppers, the comparables are really hard to find for flats above shops. And if it's, for example, got a takeaway above it, it's going to have a lot less value on that building than if you have an A1 convenience store above it. Also, it's harder to get mortgages on those buildings. So you have to take that into account when valuing the upper parts. So if you have a, let's call it again, KFC, and they're paying £10,000 and you're making £10,000 from rent from above, but the actual market rent should be £13,000 for the upper parts. The market rent for the upper parts is correct because of it being above a KFC, and also the value of that, the upper parts is going to be devalued, not by a huge amount from the valuation reports I've seen them do. They don't value it hugely, but they actually, the difficult thing here is they actually value the neighbouring 2 flats lower as well, that is next door to that KFC, or and that's where you have to be really careful, because you think that you've bought a convenience store above the flat above, and next door to it is the KFC. The valuers and the Red Book valuation will value the upper parts of the one next door to the KFC lower than the one than a convenience store that's next to other convenience stores. So that's where you sort of have to be careful with the valuations. But essentially, you take your values and your comparables of the ones nearby and anything that's sold. Again, auctions are great for this because auctions will give you the price of that property. You will then know that area. You can quickly find it on Allsop or Acuitas or Barnett Ross. And again, if you guys want a list of all the commercial auctions, I can help you with that. And then you use that and then you search for them. If you've got a software I was talking about before, there's EIG, which is a commercial auctioneers. It's like all the auctioneers database, and it's not that expensive. It's a few £100s a year.
We'll be having them on as a guest speaker, so they're in the pipeline. EIG.
Yeah, they're great. So who have you got there? You got
David is going to be speaking.
Right. Yeah, and they'll be able to give you. So once you've got all of that information, then you should be able to get you. And they're great. I mean, we use it for all of ours as well, and that will give you all the information for each property. And then you've got your comps there. So that's probably how you want to value your mixed use building. And just be careful of those hard to mortgage buildings like above restaurants and A5 and pubs as well.
Great. And then Ed is asking, with a typical local covenant, like a hairdresser, what would be the average yield?
Oh, it depends. Now you're asking the $1 million question. It depends on the area. It depends on, there's so many. I mean, if I drew you a map of the UK and I told you, you know, in Scotland you're going to be getting 12%, and down south you're going to be getting 4 and 5%. That would be great, but that's not the way it works. It's very specific. Having said that, there is some general yields you can look at, and there is some things you can say. Well, look, I know. If you just break it up into segment, you can say up north you're going to get a higher yield, and you're going to be in the 10 to 15% mark, depending on the area. Down in the Midlands, you're going to be between 8 and 10%, and then down south you're probably going to be anywhere between 5s and 7%. So if you look at it like that, you probably can take an average, but there is no exact. You can't just say an exact hairdresser will get you 5%. That's not the way it works.
Okay. Any tips on offering with an exchange with delayed completion?
Sorry, any tips, did you say?
Yeah, any tips?
Like
some agree?
Yeah, so you can get it. Now, this is actually a brilliant topic, actually, because on commercial, it's an interesting space if you want to add value, because when you've got a rental that is already being achieved on a building, the seller's more inclined to give you a delay completion because he's going to be making the rental payments. So providing you exchange and you actually do the exchange and you're not asking for an option agreement or anything like that, there's no reason why the seller won't do that, because he'll be eating the rent during that whole time. And if the tenant decides not to pay, then A, you'll be liable for that rent. B, you have to complete on that building. So he's in a very safe position, but that gives you time to apply for planning if you want to, or it also gives you time to raise your finances. So it's actually an interesting area which not a lot of people use, surprisingly.
Okay.
For commercial.
Thank you. And then Graham is asking, so banks are reducing on the high streets. Where do you see building societies going?
Sorry, banks are?
Banks are reducing their presence on the high street. And he said, what about building societies? Where do you see them going?
Probably, I'll be honest with you, I think building societies will stay a lot longer than the banks, but eventually they're all going to go. We just recently acquired a Lloyd's TSB and a, what's the other one? We've got a Barclays as well into the portfolio, and they're all going eventually. I mean, once it goes online, eventually there's no point in them spending all this money and rates and rent and overheads. Having said that, those buildings are perfect. I love those buildings, providing you can deal with the strong rooms accordingly that they have in there, and that's a big problem. Providing you can get good dilapidations from it, again, another topic for another day. That's a whole topic on itself. But providing you can deal with the dilapidations and you can exit some money, you'll be in a position to actually have a brilliant building in a good location. But yes, I think they're all going.
Great. I love this. This has to be my most favourite question, I think. Margaret is saying, can you facilitate a delayed completion or option if approached? So if we come to you and say you've got a site on and we'd like a delayed completion, can you facilitate that?
Yeah, look, if it's in the best interest of my client, then yes. Remember, you've got to keep in mind, I act for my client. So if you are my client, I act for you. I don't act for the other side. So for me, I have to do what's best for them. So if there's a proposition that comes to us and you ask me for delayed completion, as I discussed, absolutely we put it forward to the client because it's the best for him. He's going to make money. If it's not him, he or she, sorry. But if it's not, then we would speak to the client, but we would advise against it.
Okay. Does anyone have any further questions before we basically say good evening to Prash? Because I think Prash has done a great job here in answering all your questions.
Yeah.
Elena, could I just ask a question? So Prash said that we could take up a 30-minute call, but he didn't say how to contact him. I mean, we've got your contact details. I know I got that. But what I mean, how do you want us to contact you? I mean, obviously, you don't want all of us to call you right now.
Send me an email and just reference this, the Property Alliance. And if you send me an email or WhatsApp message, whatever you prefer. Look, I don't mind how you contact me. We're very open. Feel free to contact me however you like. Happy to have a Zoom. Happy to have a one-on-one call. And whatever you guys prefer. Look, there's no drama here. At the end of the day, we're all at home, and as long as you don't mind hearing my screaming kids in the background or my wife shouting at me that it's dinner time, then you're more than welcome to call me whenever.
Okay, that's great.
Brilliant.
Can I just say thank you very much, Prash? You've done a brilliant job for a very complex subject.
Thank you. I was really nervous, to be honest with you.
No, that was brilliant. But if I could just round off for the guys, because I know it sounded really complex, but with regards to your average rent per square foot, all you need to do is pick up the phone and phone a local agent. The same for the average sale per square foot. You don't have to be on the computer trying to work it out. Just phone up a local agent. The same with the what is the yield for the area. Just phone up an agent. They're willing to give you that. And what Prash says about the KFC, so any smelly foods at all, even if you haven't got a smelly food below you, even if it's next door, the banks don't like it, the lenders don't like it, and they will devalue your residential above because of a smelly food, or some won't lend at all if you've got a smelly food below. So,
and another couple of quick pointers for the guys as well is, make friends with some valuers. LinkedIn, and we've got access to so many ways. Pick up the phone and just be nice to them and just say, listen, I'm in this property. This is what I want to do. I'm buying this. What properties are you guys struggling to get finance on for your or mortgage brokers, or contact these people that are professionals and ask them the question. Once you ask 4 or 5 people, you will know your answer, and you'll know what's lendable and what's not. Again, if you guys want some average pounds per square foot, call me up. I'll help you out.
Yeah, definitely. And the other one was the ITZA, that stands for in terms of Zone A. Again, just phone up the local agent and find out what the area is in terms of Zone A prices, and then you can work it out. One last caveat with regards to the rating list, they're generally historic. So it's done every 5 years. So if you've got the rateable value and it's like 3 years old, you might want to still ask an agent just to compensate, because obviously the rent will change.
Yeah. Last one was in 2017. Right. And actually there's a reform happening actually on that. And I was reading the legislation on that. It's not happened yet. and it's in discussions, early discussions, but there's a reform, and it's all due to COVID. So watch that space. I think there's something coming in, just like what they've done. If you notice, all the laws have changed because of this, as we all know, with the E classification, the use class classification. Everything's about to change. So just keep a watchful eye on these things.
Prash, can I just say something? Thank you very much for your presentation. It was amazing. I've been viewing properties with Joseph because I live in Cheam and Epsom, and I've seen a couple of the ones that you've shown in your display today. So it's all very relevant for me.
That makes me very happy.
Yeah, and Joseph is amazing. I've connected with you, but because I think he just WhatsApps me if there's something comes up. But I would welcome a Zoom call because I think I have struggled with the valuation, especially of vacant property. And I just wonder why, obviously we've been in competitive bids during the lockdown on some of those Cheam properties that you've been talking about. And I was one of them in the queue to view. So I'd welcome a Zoom call if you could, sort of give me some tips on how to, perhaps where I'm going wrong on my calculations.
Absolutely. Yeah, no, you're more than welcome to. So if you send me a WhatsApp message or a call, we'll definitely go through those exact properties. It gives you an idea of the ones that you were bidding on, and we can give you some ideas. If they've exchanged, then I can give you the information of what level they've exchanged at once it's been done, and then you can know where you stand. I'm glad you enjoyed Joseph. He's an absolute machine, and he's amazing. And everyone on my team. I set up this business, as I was telling Elena. I was telling her when I set up this company, I set it up with a difference in mind that we're not just every other agent out there. And I was in a completely different business. I ran a business for 12 years before that. I left university at the age of 19 of Southampton, and I've worked in the business, and I got messed around in property, and that's where I set up my company. And it's about transparency, and it's about being ethical, and it's about doing things right. So you should only get that from any. I'm glad you said that about Joseph, and my team. Everyone in my team will have that and will honor that. So if we're helping you add value and sell something, which we work with a lot of traders that are buying and selling stuff and adding value, we will do the best for you, no matter what. No one ever needs to pay us any more than what we're contracted for.
Brilliant. Prash, can you just go back to your slide, because I think this is really relevant for a lot of people. The valuation slide, the one before the Pearly deal, where you had the 3 different valuations. So just before your Pearly deal, yeah, that one. So guys, when you know what the other one.
Oh, sorry. The pounds per square foot one.
Yeah, that one, yeah. So on the first column where he's got building valuation, so when you get an idea of what the market rent is, so he's got the 21,000 there, how you do the calculation is you divide, once you know what the average yield is, so you find it out from a local agent, you divide it by 0.57, that's the calculation. So you do the rent divided by 0.57. So whatever the yield is, it's 0. And then the yield, and then times 100, and then that will give you that value, what he's got of 368. All right, because I know we said it very fast in that, and it just goes over. Sorry. That's all right. I know, because we understand it, so we just blubber away.
Once you get used to doing these things in commercial, it just becomes second nature. Look, I'm not a crazy good mathematician or anything like that. I leave that to Joseph and my other business partner Mitchell. But I can identify a deal, and if you can sniff out a good deal, then that's what you need. As you say, these calculations and these things will just come second nature to you after you start doing them enough, and they will make all the difference once you understand them.
Yeah, and then you times it by 100, and you get your figure, your valuation figure.
Yeah, I mean, no, but the thing is, if you do it by 0.07557,
oh yeah, it's done it. Yeah,
so that's why I put that on there, because it's a simpler way to do it.
Yes,
so if you do it and then you times it by 100, it gives you the total percentage. But if you do the 21,000 divided by 0.057,
you're right. You are right. Yeah.
Yeah. So so there's all the information. I hope it's been informative.
It's been fantastic. Quick question from me, Prash. Do you guys use CoStar or just auction comparable evidence?
Yeah, so we use all the softwares that are available.
So you use CoStar?
CoStar, we use CoStar Suite. So the figures that you've got here by the 5.7% was taken from CoStar. So CoStar Suite, I think we pay, I can't remember, I think it's like £1,000 or two.
Yeah, I know it's expensive.
It's a lot of money,
right.
£1,000 a month. And that will give you market comparables for pretty much everything. Don't get me wrong, you can't rely just on those figures, because they're just being plucked out of there, but it's great.
Yes. So what I wanted to ask you on CoStar, does CoStar give you comparable evidence on, like for instance, Limbus only store leases that are 7 years and more? Does CoStar have leases that below 7 years, or is it only 7 years plus?
No, so in most cases, you're right. 7 years is the rule because it's a registered lease on land registry, and therefore that's available for everyone. But having said that, 7 years and below, so CoStar have a slightly different model. CoStar go out and send their guys to call up these companies, and that's how they generate their data. Same as EG, so Estates Gazette. They have a software called Radius, which is all equally just as good. And Radius is also the same way. They have people phoning up the investors and the funds and people like that and ask them the questions. So in most cases, they will have some of the data that's below 7 years, but I always find it's really hard to find that data.
Right. Okay.
And it's easier just to call up the agent locally, or or if you know the property, again, just land registry search and make a phone call and ask people.
Okay, so just so you guys know, it's only compulsory to register a lease if it's 7 years or longer. Other than that, we're seeing out on all the 3 years and 5 years. We're not seeing that data. So just so that you know. Okay, great stuff. Thank you, Prash. That was
brilliant. Thank you, Prash. So you can stop sharing your screen now. And then
oh wow, I can see all the people now.
You can indeed. All right, will you feel free to stay on if you want, or you can leave. It's up to you. We're going to now move on to a deal analysis. So I'm going to ask Iain if he can share his screen, and actually it is going to be a bank site. So
so guys, I'm going to have to stop off here because I've got 2 little babies that are waiting for me to put them to bed, so I'm going to go and deal with that. But look, it was a pleasure meeting all of you guys, and like I said, you've got my details, and reach out to us if you need, and we'll help you where we can.
Thank you. Thank you so much, Prash. Thank you.
Thank you, Prash.
Take care.
Thank you very much.
Good one, guys. Good luck.
Bye.
See you later. Bye.
Okay, over to Iain.
That was brilliant.
Okay, can you hear me all right?
I can hear you.
Okay, great. My internet connection is a little bit unstable because of the summer night. Everyone's just on their phones and watching TV and stuff. So apologies for that. I'll try and get through it as quickly as I can. So this is a direct to vendor opportunity. We did a little talk about our campaign, our direct vendor campaign.
Is it me or is he cutting out?
Back from it. This is a high street.
Yeah, it's cutting out.
Okay, this is a high street location.
Your internet connection seems a bit...
A little bit about the local area. So beautiful little place.
Iain, if you want to switch your camera off, it might help with it being a bit more stable.
Okay. Bear with me a sec.
You start again, Iain. We couldn't really catch very much of that, I'm afraid. Thank you.
Yeah, sure. Let me turn my camera on. Okay, is that any better?
Yes.
Oh, good idea. Okay. Great. So this is a direct to vendor opportunity we found through Nimbus Maps, which we spoke to you guys about. It's a place in Tewkesbury. It's a bank, an old Barclays. It's a little bit about the area. Tewkesbury's got about 220,000 people. We spoke to some of the agents in the local area, and they said that the sales weren't very strong in the area, but rental you'll do all day. So that helped us to define the strategy. It's got good transport links, if you don't know where it is, Wales, Midlands, Southwest. Specific property, it's an old Barclays Bank on the high street. It's quite a large property with rear access. So it's being sold with vacant possession. The Barclays lease expires in March, which is why they're kind of under a bit of pressure to well, a bit of price pressure. We've managed to get them down quite a bit from what they were expecting, and we've negotiated 300,000. It's a conservation area, so this will require full planning. but it's got full car parking spaces at the rear, which add value to the rentals. There's shared access to get there. It's through an ambulance station, and that's not a problem. There's also a bike and bin area at the back, and a little area you could turn to a patio to convert the back of the shop. Now we think we can probably get 1-2 double bedroom flat and 3 1 double bedroom flats. There's possibly the potential to go into the roof. We couldn't actually get into the roof because it was all padlocked up. As it's an old bank, the security is quite high.
Iain.
Yeah, we'll reduce retail zone A.
Iain.
Yes.
Sorry, just because we're only still seeing the first slide, so I'm not sure if you're actually moving through the presentation or not yet.
Right, that's weird. Can you see this?
Yeah.
And that one? Did that move?
Now I can, but before it was just on the first page.
That's weird. I hit play and it didn't let me. Maybe it starts a new window. That's really annoying. Okay, local area. Some pictures of the local area. It's nice. In through that, and this is the property. So you can see the sort of footprint of it there. 4 car parking spaces to the rear. It's got these beautiful Tudor buildings either side of it. Fortunately, it's not one of them. Otherwise, planning might be a bit more difficult. And that's what we're looking to get out of it. So 3 single beds and 1 2-bed, but all doubles. And this is the layout we're looking at. So this is the floor plan that we got. So I basically scaled it and dropped it into floor planner. The problem, yeah, we'll come to that later, but this is what we've turned. So this is the ground floor where you've got, you used to have telemachines and things. And this is what we're proposing to do with it. So you can see the retail zone A, big yellow on the left, and then you've got corridor with a hallway, and these toilets and the storage. That's all part of the shop unit. So it was an actual commercial agent who took us round, and she recommended popping all of that into a plan because it will raise the value and make it easy to sell or to rent. And then as you go through the door at the top into the top hallway, there's stairways down to the strong room, which is a really cool place actually. So first floor, and staircase up, which is that white area, and then a hallway. It was all just used for office space for the bank. And this is what we're proposing. I did this kind of in a rush, which is why the walls are kind of angular. I'm going to change the layout, but it's just to sort of prove the concept really that we can get a double bedroom in the front, even with those awkward windows, and yeah, a single bed in the back. And then upstairs, this is going to be a single bed, and this is the cellar with the strong room. So the strong room is just going to be storage, overkill storage for the shop. So this is where I'm going to pass over to Robin. So Robin, can you, if I stop sharing, can you talk over it while I do it?
But I can't see it now. So I'll share my one if you want.
Yeah, maybe use this one.
Okay, so this is pulled straight off Nimbus. For some reason, it's duplicated. So we've just taken the A and the B off the total area for that for the shop front, and then flat at the back. And upstairs leaves 1,269 square feet. And the agent gives values of 125 for 1-beds and 150 for 2-beds. So nothing like you London guys. This is much more provincial. With a total value of 525, but that's without the a value for the shop. Cost to convert, just £100 per square foot. Easy access at the back for skips and trucks and things. And the negotiated purchase price of 300, plus the legals, plus the cost of conversion comes to 479. So if you remortgaged at 75% loan to value, you get 393,000, leaving 85 grand in. but there's the commercial unit downstairs, which has probably got a conservative value of 120. So actually, you could take your money out. That's if you're renting. And the rent's 550 for 1 bed and 650 for 2 beds. We're kind of guessing at the commercial 1,000. Rateable value was higher than that, but as the previous speaker said, the rateable values are a little bit old. And yeah, that all adds up to 3,300 a month. If you take off the mortgage, take off agency fees, and put your money aside to make sure everything's okay, you have a cash flow of £1,500 a month. And yeah, take some time. Take 5 years to get your money out if you don't do anything with the downstairs. But if you sell that into your SaaS or you include that in the refinance, then you wouldn't be leaving any money in. And the yield is 7.54%, if we've done that right.
Okay, thanks, Robin. That's great. So some of the risks, the Isle of Tewkesbury is well known for the flood zone. It's not supposed to be an island, but that does happen in wintertime. But that's why they call it a high street, because it doesn't flood, it's high. With the local agents told us that the seller of them, when this happens, we haven't checked with insurance to work out whether it's going to affect the insurance at all. But there's loads of shops on the high street and they are insured somehow, so we're not too worried about that. Plus the strong room was very strong and obviously heavily tanked, so there's no way that anything's getting through that.
What is the flood zone?
Structurally,
sorry, what is the flood zone?
What's the flood zone?
Mm.
Well, you see where on the right hand side where that green.
No. Yeah. What's the rate? Which is it? Flood zone 1, 2, or 3? Are you not sure?
It's not in the flood zone. It's kind of off it. No, it's off. It's not in the flood zone.
Okay.
That's it's the bit that's not got water on it.
Right. Okay.
So yeah, structurally, it's complicated floor plate. We've seen some beautiful open plan offices which are clean floor plate, and it's been so easy to work out where stuff goes. So it's going to be a challenge to do what we're suggesting we do. That doesn't mean it's not possible. There's some heavy RSJs, really nice high ceilings as well, so they're not going to get in the way at all. And this is what we're proposing for the acquisition. So the guy's not in a rush. It's in a pension. Well, he's kind of in a rush for someone else to take it over and agree to take it off his hands, which means, but he's not in a rush for any money. So we've managed to negotiate a lower amount on a straight out purchase, which we think we can secure on a purchase option, which means that it's time to take over control of the building, maybe start works, apply for planning, and hopefully get through to completion with the planning uplift so that we can refinance GDV. And yeah, we're planning to just build it out, retain it, hopefully pull as much money out as we can, and rent it for an infinite return investment. So that's yeah, very it seems like an ideal opportunity, but I'm sure it will come with its challenges. I know we spoke with Elena about it. She's had a good look at this property as well, and first time we looked at it, we're like, this isn't going to work. We're not going to get that many flats out of it. The local area GDV is not very good. The rent's not very good. But then we managed to squeeze another flat in, and it seems much more attractive. Just got to work out what to do with the walls.
Can you go back to your calculation slide, the first one, where you've got your purchase price and everything? Yeah, that one. Okay, so you'd be buying it for 300, right. Yeah, and then with your costs and everything, it will come up to 479. 479, yeah. And the GDV will be 525. Is that right?
Excluding the commercial aspects.
Oh, excluding the commercial.
Yeah, we haven't. It was only when he was telling us about how to value a commercial aspect, Robin and I like, quick, get it in, but we didn't manage it.
We almost changed it 3 times during his presentation. I was like, no, don't. We'll explain that. We'll explain.
Yeah. Right. Okay. So there's roughly £45,000 profit there, but you've still got the commercial element to add on. Yeah.
Yes.
Right. Okay. Got you. Have you taken any contingency out? No.
Well, we're hoping that the contingency will be coming out of. Well, yeah. Well, if you involve the commercial aspects, then
all right,
there is enough room for contingency. You know, it's almost like that is the contingency.
Right. Okay.
Yeah, because we've not included it in the cost and the GDV.
Yeah, this is without that.
And what have you based your cost per square foot on for build cost?
£100.
£100. 100.
Yeah.
Okay. Okay. I know Paul normally says 100 for conversions. Did you get local builder rates for that?
No, we just thought it's 100 is pessimistic, as in it's not likely to cost that much. Knowing what the local area, builders aren't expensive around there. It's not a development area.
We're not in London, Carly.
Sure. But I would ask 2 or 3 builders just to be sure what the rates are for the conversion. But yeah. Okay. All right. Well, because you've got the commercial as a contingency, then that's good. Yeah. And if you're holding it, then you know there's not a huge amount of risk in it.
So Shaquila's asking, what's the rate per square foot for that, the value?
What converted?
No, just the area.
Average sales value.
Right. So this is where we looked at Nimbus and we looked at their approximate valuation, and I actually took that slide out. It might be in one of yours, Elena. It was quite low.
Oh, wasn't it? Was it 277?
Yeah, around the 270 mark.
I think it was. It might have been. I don't remember off the top of my head now. I think it was lower than that. Was it?
Yeah. So that's why we did 2 comparisons initially. One based on the agents, one based on the back of Fag Packet, which is the Nimbus values. And first time out, they came out to be pretty accurate. But when we did a bit more looking around and speaking to agents, it's quite a difference.
Right, okay. Is it classed as two units, the bank, or is it just one?
It's just one. Yeah.
It's not like 92 to 94 High Street or anything.
So there are
technically 2.
Oh, but then it's 2 units then. So that means it's PD.
It's in a conservation area, so I don't. Okay.
Because one of the thoughts I had was to split the shop. However, it's kind of a bit of an odd shaped shop, so you couldn't really split it, and it sort of, you know, you kind of end up with 2 sort of units. It's just kind of a bit weird, the shape.
Sure.
Well, the front's not so bad. It's just the back.
The front's not bad. Yeah, it's just the back. Yeah.
Okay.
But like
so maybe, Eleanor, it's not a bad shout because you know, depending on what people are looking for around there. If you're only letting off the front as retail.
Yes, I mean, I think that potentially then gives you 2 commercial units so basically where you've got that line, you just kind of split that, divide that into 2, and then you need to just, it depends on what you're going to do at the back and how you're going to add access, because from this unit, do you so basically the window that's on the left hand side there, that's the what do you call it, the ATM. So whether you use that as an access and a doorway in, you could just basically either block that off. Then you just need to look at how would you then split that into 2 shops. But initially my instinct was to split it into 2 shops, more so that you could then do, you know, 4 flats above. But just with the floor plate, I just wasn't sure it would work out that way. But that was an idea that I had.
Right. Okay. But because he said it's in a conservation area, it's not PD, so he can get Yeah.
You could get the flats above, but on the ground floor, you'd have to do planning.
So what's the
No, and the flats above you'd
I
have to
was
do
just gonna
planning. It's a conservation area.
So can't you?
Yes.
No, not on conservation.
Oh, right. Okay.
It's not class O. It's class G.
Yeah.
But it
But you
is
can't-
offices above.
I thought you can do class G in a
It's not ancillary space. They're offices.
Oh, right. Okay. But this is not class O though. Is that not an A2?
Is it offices above at the moment?
Well, it was a bank and they used the upstairs. as
Yeah. There's
So it
Cat
was
5
an
everywhere.
building. Yeah.
Oh,
That's
right. So you can do
ancillary
as many units as you want then upstairs.
Oh, in a conservation area.
You can do class O and class G in conservation areas.
Yeah.
Great.
Nice.
You could definitely.
Yeah. So you can chop it up as much as you want at the moment because there's no minimum space standards providing you start soon.
Right. Tomorrow.
Yeah. Is there any rear access at all? And
Yeah.
Yes, there's rear access.
There
Car
is. So you could.
There's 4 car parking spaces.
Right. Okay. But you can't do class M because it's a conservation area. Okay. Okay.
So what was, I didn't get the average per square foot valuations of the properties saleable.
You said about 277. Something.
Oh,
No, that's
277.
not right. That's not right. That's something else. That's a different project. Let me.
The residential. Just talking about the residential square foot.
Yeah.
Yeah,
Average
so-
sales price per square foot.
Let me just see if I can find it. Give me one. Oh, you carry on talking.
Can I just ask? Can I just ask something? How old's the building?
Yeah.
Oh.
That's a good question.
Yeah. I was going to answer that.
The average price per square foot is 244.
Oh, that's not bad for Wales. That's good. 244.
Oh, is that where it is? Wow.
Wales. It's not in Wales.
Didn't it say southwest in Wales?
It said
It's not.
Tewkesbury.
Tewkesbury's Midlands,
Tewkesbury.
South Midlands. Yeah.
It's
It's
GL20.
between Bristol and Birmingham.
Oh, GL20.
Forster.
And so's Wales if you sort of look over that way.
Yeah.
Saying that, you might be able to get a class, not class M, but you might be able to apply for planning because it's at the rear of the shop. The conservation area is normally concerned with, the frontage, that you're not changing the front.
Mm.
So it's a
They'd love
possibility. You could get
to change the front if we could put some mock Tudor on it.
Yeah, and then obviously if it's built after 1948, you might be able to get an additional. No, you can't. It's a conservation area. Well, not under PD.
Yeah. And the roof actually behind that facade joins in with those Tudor buildings either side.
Oh.
Yeah, strange.
Steve's
What do
asking
you
who's
mean by
the
that?
target tenant for the residential.
Target tenants for the residential, based on our conversations with agents in the area, they would probably be retirees. There's a big community of retirees. They just love it because it's a nice place to stay. And they said 1 bed studios, 2 beds, they'll go all day.
Because the town is thriving.
But would that be appropriate for the stairs for retirees?
It's got a lift.
Oh, it's got a lift. Oh.
No, it's got a mini lift.
It's got a lift for money and paper, so it's not really good enough unless they're really small old people.
Right. So if it's got a lift,
my mum's 82 and she still goes up the stairs. Don't write them all off.
No, I'm not writing them all off. I'm just talking in general. If you're,
she's 83.
Well done to her. Well done to her.
Yeah. So.
But obviously you got 2 floors there, so would a 80-year-old generally want to walk up 2 flights of stairs?
Thinking more of the 68.
Look at different target markets to see.
Yeah, sure.
What we'll do, but you might be able to get a flat in the back because obviously it's not going to affect the appearance of the front of the building. You never know, but obviously it would be planning if you've got rear access, so that's a possibility.
So what you're saying, we could use Class O to get PD on the way to start the flats
on the office upstairs, yeah,
both floors, and then be applying for planning permission for the
back, yeah.
So yeah, a staged approach would be awesome.
Yeah. Yeah.
Thank you, guys.
Yeah, so that would be planning, and class O would be PD.
And we can make there's no minimum space standards if we
Not
do
at the moment, not until April. As long as you start. So if you apply and you get it, then
because older people tend to be a bit smaller, don't they?
So yeah, it's got potential, but if you're going to keep it and you know what your target market is.
Can I ask a quick question?
Yeah, sure.
Sorry, I haven't got my video on tonight. Is it worth checking the town plan in case they've got any restrictions, because it's such a kind of, you know, listed building, conservation area kind of place? Is it worth
the local plan? Yeah. Yes.
Yeah, just in case they're restricting on PD, you know, I don't know, but
that's
right.
It's just crossed my mind then.
Yeah.
I was asking about the age of the building, because I was wondering whether it's a, you know, really nice old bank sort of inside that you could somehow capitalize on for the shop area.
It's really not, no.
Not at all.
It's not, no. Okay. Yeah. When I looked at it again, I thought maybe. Yeah, go on.
No, just an answer. What is the size of the bank?
The size of the bank. If I can just switch windows, and work out how to do that, I can show you a little.
So we know how big the shop is.
Oh, in square feet.
Yeah.
That's on this slide.
So 2,292 square feet.
Wow, that's a decent size, isn't it? What's that?
Zone A and B is 895 though, isn't it?
Oh, it's 896. That's the size of the bank. Total area is with the upstairs, yeah?
Yeah.
Yes.
Okay, so downstairs it's 8. Okay, so if you split that into two shops, that's quite small.
Yeah, that's what. Yeah, that's why.
I'm
saying it.
Guys,
okay, so maybe there's not enough space to get a flat at the back then.
So just on that schedule from the VOA, have you noticed it's duplicated?
Yeah.
Okay.
Yeah, it's Nimbus. Sorry.
Fair enough. Sorry, I'll be quiet.
No, that's fine. No, they always do that, but I shouldn't have put it on there.
Robin, the Nimbus maps you got this information from, was it just a standard Elite Plus, or was it chopping up as overlay?
We did. We actually did a bespoke thing with them where we gave them a criteria and a pot of money, and they gave us a spreadsheet with lots of addresses on. And so we're sending letters out bit by bit.
Yeah,
and the idea was that they were low value uppers, short leases.
Yeah,
and this is just one of the ones that's responded.
Oh, that's good. And what about the whole process of the communication that you've had with the vendor? Just a sort of little synopsis of some.
Yeah, well, Iain has been handling that.
Yeah, I thought initially I was in contact with the vendor, but it turns out that he's an agent who seems to know them really well. I think he manages the property on behalf of their pension. So any communication goes between, you know, he's the person I go through, which is great actually in a way. I kind of get a good feel for what it is they really want, instead of you know, speaking to a fund where you've got lots of different entities interested. And it is great. He's been.
And did you did you write directly? Did this letter go to the commercial address or to the director address?
I've got no idea.
It would have gone to the commercial, the name of the company, which is associated with the building,
right?
Which is the pension. So this MJF SAS trustees.
Okay.
Can I?
Oh, well, that's interesting. Sorry to cut you, Sabina. If it's a SAS trustees, well, you need to find out if capital allowances are being paid. You might get that as well.
Yes, I spoke to someone about capital allowances, and they seemed very confident that we would get a fair chunk out.
Fantastic. Well, that makes it even juicier, doesn't it?
Yeah. The strong room for one thing, and the lift, right?
Yeah,
Caps on
absolutely.
those,
And he said more so than the strong room, it's the cabling, because it's been a bank, you know, you've got false floors in, and that's worth a lot. So you can claw back a lot from the bank.
So you just need to check how long the SAS trustees has owned it and whether the previous owners claimed it.
Yes, well, they bought it 2011, wasn't it?
There are two entries, one for 2010, one for 2011, for the same price.
Can I ask whether you sent the letters out through mail merge, or did you handwrite your letters?
No, we did a professional.
I did a mail merge.
We tried to look professional. We tried a couple of different approaches, but
we started with my approach, which was mail merge, window, envelope. My other business, we use PPI, you know, not a stamp, but the bit that sort of looks like that. And so we did it like that, and actually we've had responses from it. So we haven't tried the handwritten. Oh no, did you do some handwritten ones, Ian? No, you typed yours as well, didn't you?
I did handwritten envelopes.
Handwritten envelopes.
You have done the handwritten.
You can see the lift there. It's quite small.
Oh yeah.
Yeah, so
you could get a granny in that probably.
Just
get back out again at the end.
One consideration, guys. Just one consideration. If you are going to have the elderly in there, if there's a lift and you're going to hold on to the property, you got to think about the maintenance, because it's quite expensive to maintain a lift. So
yeah, that lift's like 4 foot tall, Carly.
Oh, so you're not going to use that as you're not going to use the lift then?
No, I was kidding about that. The lift has to go, I'm afraid. It's yeah, like you say, it would be way too much to convert into a full lift, and then you have to make it's not worth it for one floor. It only goes up one floor.
Yeah.
So
yeah,
I think it goes down to the strong room, doesn't it?
Robin, can I see your envelope again, please?
Yeah, after outside.
Oh, yeah. I was just giving you an example of where they print on. So you don't have a stamp, and it's not a franc. It's not print, but it's actually part of the. Because I in my business, I run a claims management company, and you know, we used to spend a couple of grand a month on post. So we don't be sticking stamps on our.
So it wouldn't be practical for us to do that, though, would it? For a few direct to vendor.
No, but you could probably print on the envelopes. You know, like if you want to print something through eBay, they just give you something to print. There might be something like that, other than a stamp. But
how did? Sorry.
Go ahead.
What you're saying. Sorry. I was just going to say, how did you alight on this one? What made you choose this to send an inquiry to?
Low value uppers, isn't it?
Yeah, and
short
Nimbus,
was it?
Leases.
Yeah,
short leases, low value uppers. Nimbus did a whirlwind presentation on Excel where they put lots of formulas in and worked out which ones could possibly have the best value to to convert, and we started at the top of the list.
So basically, instead of getting the shops and uppers overlay, they paid Nimbus $3 grand directly and just got a spreadsheet with all the details
in an area that we asked for. Yeah.
Okay.
Did you write to the whole list, or are you still working your way through it?
We're still working our way through it.
And what was your response rate from what you sent out?
I'm not sure. We're totally sure how many went out. I sent them from my home to my office, and the mail merge went a bit crazy, and it printed out hundreds of letters that didn't have addresses on. And my colleague was like, "How many are you sending? It's still printing." 150, and we probably got about 5.
Okay. And what was your did you use Ranjan's letter template?
No, I don't think we had that at the time.
Yeah, we did have it. We started with it, but we kind of made it our own. We all had our own inputs. And,
I think we use a bit of Leo's as well.
Because Ranjan's just sounds like Ranjan's talking. You can kind of imagine.
Yeah. How did you find the expiring leases? stuff from Nimbus. Did you find that any good?
Short leases. Short leases.
Short
Well, it
leases.
came out in a spreadsheet, so we just had to filter.
And what it had like 1, 2, 3 years left on the lease.
It just had the end date.
Yeah, 3 or less. Yeah.
Okay.
Have you spoken to these people because they've sold 21 properties in the last 18 months to see what other properties they're selling off?
Sorry, say again.
Yeah, I've just been checking the site on Nimbus Maps, and it said that the owners, the SaaS providers, have sold 21 properties in the last 18 months.
Wow, that's a huge amount.
MJF SaaS Trustees Limited.
Yeah, that's right.
But I'm saying, have you spoken to them about what other properties they're selling off?
No, I hadn't realised that.
Oh, there you go.
Good chat, Craig. I'm glad. It's great doing these things.
There you go.
You guys
Yeah.
are amazing.
Well, yeah, that was something that I shared with Carly, wasn't it? The selling mode and how to find it on Nimbus.
Yeah. Yeah. So guys, when you go on Nimbus, if you where you see the owner, there's an arrow to the left-hand side, and if you click on that arrow,
it's a little plus sign.
There's a little plus sign, and if there's a if you click on it, it will tell you if it's in selling mode or not, and how many properties they've sold in the last year.
Scroll up to the top, Iain. So basically, if it's a company and you click on it, if there's basically that third line is not there, then they're not in selling mode. But if that third line is there, where it says in selling mode and how many they've sold in the last 18 months.
Wow.
Yeah.
That's amazing.
Yeah.
You didn't see that.
Yeah.
Oh, no, it's amazing.
Is this available for everybody that you've subscribed to the Nimbus map?
Yeah, everybody.
Oh, okay.
It's on the, I think it's on the Elite. I think, I don't know if is that on the free version as well, Carly?
No, Elite Plus.
Yes.
Oh, that might, so, because I believe that everything on the free version up until the report, basically, you get everything above the report that's on the free version. Right, okay. Does anyone have any more questions for these guys, or should we move on to our next skill analysis?
Could I make a very quick comment?
Absolutely,
please.
You may.
Yes, thank you. I don't mean to be. I'm just a little bit worried about you on this because if you weren't able to get the place rented out or sold, and your costs go a little bit over, I personally would worry that there's not quite enough margin in there. So I'm just wondering whether you should go back and try and knock them down a bit more, another 50 grand.
We went in.
You have you? Yeah.
Yeah, they would.
Okay. I was just thinking if they were in, sort of in a mode where they want to just get rid of stuff, then they might come down a bit more. I don't know. I just thinking about it.
Yeah.
It's something else I'm looking at the moment. I'd want a little bit more margin, but it's just my perspective on things. Maybe I'm too cautious. But
I mean, the high street is very busy. There's not many empty shops. And and we actually done the figures properly, including the value of the commercial space.
Yes. And I suppose the other thing I was just going to mention is, as it is obviously a popular sort of tourist town, presumably you've got service accommodation as a possible further exit.
Yeah, good idea. Good idea.
You do seem to have chosen pretty much the only building that isn't listed on that road.
Wow.
Well, have you seen the other ones? They're all absolutely beautiful. And the Lloyd's there is actually mock Tudor and was built in 18 something. And the rest are the two estate agents we went into. They have just got beams like this all over the place.
Can I ask what the software was that you used for your floor plan? I think Iain described a floor software.
Called Floor Planner.
Floor Planner.
Is that a free one, or do you pay for that one?
No, it's free.
Okay.
With the free.
So as long as you don't do it in a hurry, it won't come out wonky, yeah?
Yeah.
Okay.
All right, guys. Well,
so can I just jump in with a quick question, please? I just wondered, I know you talked about 100 quid a square foot. Just wondered if you got any estimates for that, because there seems to be quite a lot of structural work to do. And I know from another project I'm involved in, material prices have gone up massively recently. And I just wondered if that's enough to cover you.
That's what I said. Get some quotes.
Yeah. No, I think if we take this any further, we will be going much further into that. And thank you, Henry. I appreciate that.
Mm-hmm.
I
Great
had
stuff,
heard
guys.
All the best. Brilliant.
supply as well.
Yeah, brilliant, brilliant.
Great. All right, so now on to the next deal. So I'm going to bring Faz to the presentation stand. Faz, are you there?
I am indeed.
There we go. Would you like to share
All right.
your screen?
I will start presenting now. Just give me a moment.
Okay.
Do we still have Nat speaking as well today or not?
No, so Nat's going to be in 2 weeks.
Okay, fine.
So let's just let me know if you need any help there, Faz.
Yeah, I'm just allowing it so Zoom can access my files.
That guy was brilliant, Eleanor. Well done.
Thanks. Yeah, I mean,
so friendly as well.
You know what I have to say? Blue Alpine, I really, really rate them. What I really love is just the diversity of the stock they have. Like if you want to go there for yield, they've got it. If you want to go there for stuff that's just got PD already, they've got it. You know, they've just got a very diverse portfolio and they're pretty good. Like you can call them up, like all the time I speak to Joseph and I'm like, how much do you think they'll take for it? And he, you know, they're really honest, which I like. So
yeah, approachable.
Great stuff.
I was definitely a good guy to have a chat with, reach out to. I think it was good chatting to him. So, guys, this is the deal that Eleanor found. So I'm going to be presenting this. So just to let you know, the reason why it's sunny in the background, I'm in Sydney, and presenting out of here, and obviously I can't be on the ground, and that's what Eleanor's doing. So okay,
what time is it?
It is, well, my kids have just left for school, so I'm guessing it's about
in the afternoon. Okay, great.
No, it's in the morning. It's in the morning. Yeah. So they've just gone to school, so they've just left out the door. They were pulling on my leg to get them for me to drop them off, but I said no, sorry, I can't do it today. So,
okay, so no lockdown then, so that's good.
No, there's no. Well, we are on kind of high alert, so that whenever we get an infection, everything kind of locks down for 2 days. But otherwise, you know, as long as you wear masks outside and you're okay, pretty much.
Great stuff.
Okay, so this deal is essentially in Southend. It's on South Church Road, probably about an hour away from London. Essentially, what it is looking at a shop with uppers, close, not too far from a train station. And if you look at the picture in the middle, it's the third building along from the right-hand side. There is an alleyway to the side that will get you access into the back. However, the access to the upper parts is from the left-hand side. So if you can see the door on the left-hand side, that will get you into the upstairs component. So essentially, that's just giving some pictures of the inside. It was previously used as it's empty now, but it was previously used as a hair salon. So you can see the side access, which is going to the upper levels. There's some pictures of the internals, and there's the picture of the side access as well, leading out into the back. Okay, so essentially what's for sale, it's the 2-story freehold shop. It's a floor area of 1,185 square feet. It's being sold for 250, again, vacant. It's basically a retail space of 375 square feet. The rating on that property on the premises on the VOA is £5,500. And it's a busy place. It's got a Boots close by. Again, it's got a station as well. Now upstairs there's a 2-bedroom flat, or actually a 3-bedroom flat. One of the bedrooms is a small box room, and it covers essentially the length of the shop at the bottom. Now that's currently leased out for £700 a month, 8,400 a year. So there is obviously there's a shop at the bottom. It's recessed slightly to the to the street that can be brought forward. That's one of the things that we could be looking at. Now there is also a downstairs where I showed you the entrance to the flat. There is also a recessed area which is being let out to the shop next door. So that's let out about £100 per calendar month, and what the solicitors are using that for is just storage area for their files, which can be revoked. You know, we can bring that back into the shop itself, just to use that as an additional space for residential essentially.
Sorry,
so
Faz, on your previous slide, you've got the ground floor is 1,185, but the retail is 375. Can you just clarify that?
I think that should be upper and ground.
So that's the whole thing is 1,185.
Yeah, that's right.
Okay.
Yep.
Okay, got you. All right, carry on.
Okay, so the profit angle that we're looking at is to have Class M on the ground floor with a 2-bedroom flat, and with the 2-bedroom flat upstairs, convert that into 2 1-bedroom flats, and bring in the roof space as well. The other option would be to still have Class M on the ground floor, but convert the back to 2 studios, and then still go with the 2 1-bedroom flats upstairs. Retain a small shop in the front, and then the last option would be to just upgrade the tenant, configure the 2 bedrooms into the 1-bedroom, and go from there. Okay, so what we're looking at as the exit routes, one would be the refinance. So basically, you know, if we either, depending on what the finance option is, if it's cash, then great. We don't have to think about bridging or anything. If it's bridging, then it's refinance and then pull your money out. Plan B would be to sell the units. So what we try to base this on is the costs on the units themselves, the residential space, and not bringing the retail space. And if you speak to a lot of the valuers at the moment, they're you know, if you're vacant, they're not valuing the retail space, so they're tending not to do that. So we've kept that out for the purposes of this exercise. On the sales data, we're looking at studios from 100 to 115, 1-bedrooms from 150 to 185, and 2-bedrooms from 180 to 280. And on the rental data, we're basically looking at studios around the 7K mark, 1 beds in the middle of, you know, probably around 8 to, you know, a little bit more than that, and 2 bedrooms around the 10K mark on average. So this is just giving you some background on what we've found in the local area for those particular units, 1-bedrooms and 2-bedrooms. I've spoken to a couple of agents as well in the local area, and it's you know, getting them let out is pretty okay. It's quite a busy place. And sales are quite buoyant as well in the area.
Did you have any comparables for flats that are actually over shops?
Yes,
yeah. Yeah, I'm glad you asked that question. I was, we did, yeah, there's one here for a 2-bedroom above a shop. There are others as well, actually, that I've come across, but we just haven't put them into this particular pack.
Just to, so you know, a bank wouldn't look at, if they're non-comparable, they'll look for like. So that's what they will base their valuations on.
Yeah, got you, Carly. So essentially what the bank, what you're saying is the bank will be looking for other shops and others.
Shops above, flats above shops.
Flats above shops, okay.
Yeah, to do the comparables.
Yeah, I mean, here in the bottom right-hand corner, you've got a 2-bed that's sold on the same street in 2020 for 280.
Yeah, so that's one. You need a couple of them.
Yeah.
Can I just ask a question as well about the banks not valuing the vacant shop? This is exactly my dilemma. So when Prash was going through the valuation of a commercial space, he was talking about 6 and 7% yield, but in actual fact, the valuer won't. And this has been my dilemma in trying to, how do you calculate an offer? Have you got any?
Yeah, because what Prash done, he done an investment valuation. So what it would mean to you, as opposed to what the banks are valuing it at.
But Carly, that's exactly how they sell their properties, and that's why I've struggled trying to get my offers accepted. They do, and because I've spoken to Joseph at length, and he will call it a 6% or a 7% yield. So this is what I need to understand is like, what do you do? Because the banks aren't going to finance it. So how
exactly
how do we get over that when we're offering?
Yeah, I mean, with this one, basically it is tenanted but will be vacant on completion. So they're basically, by the time this all goes through, it will be vacant. But there is technically a tenant in there now.
So
but for the commercial, there's none.
No, for the commercial, there is a tenant in there. The hair salon is there, but it will be vacant on completion.
So basically, we buy on the pretext that we will find a commercial tenant, and then it will be. But for that buying process, you're actually paying for an empty unit at 6 or 7%.
So sorry, hang on, Sabina.
So Sabina, are you saying
what
that the
I
bank
understand, because I've had this problem as well, the banks will look at the lease, so it's going to become immediately obvious that the property is going to be vacant when you complete. So
but there's no lease. There won't be a lease because it's vacant.
Well, if it's tenanted, I thought Elena just said it's tenanted.
No, it's going to be vacant, so there's no lease.
Okay, so what I think, let me just clarify. What I'm saying is, when we're looking at units which do not have a lease, which are vacant shops, and Prash has just gone through his way of valuing a mixed-use property, which is what we're all looking for, right? So he's actually put a 6 or 7% yield valuation on the empty space.
Yeah.
That's what I've understood from his presentation. And this is exactly where, when I'm offering on my deals, I'm trying to value the uppers or any potential GDV and work backwards, and I don't include a value for the commercial space. That's the way we've been taught anyway by Ranjan and other people, right? But in actual fact, they put quite a good value on an empty commercial property. Do you see?
Yeah.
And because a lot of them are empty properties. So what does one do when you're offering? What do you do to be able to secure it? Yeah, because the way we've been taught is to find your end value, your GDV. You're often factoring maybe 8 or 10 months of empty commercial space. In this climate, I've not been factoring in a rental for my commercial space because I don't know how quickly it would rent out. Am I doing that? Is that a mistake I'm doing?
I think it really depends on your site. Like if this one particularly, for us, what works is the fact that it will be vacant on completion, because we could just go in straight away and do the work on the ground floor to create a flat at the back, create a new smaller shop, and then basically rent those both out simultaneously, while we're then subdividing the 3-bed flat at the top into 2 1-beds.
So you're hopeful that you'll get a commercial tenant sort of pretty much simultaneously as doing your Class M then?
So we'll look to do, so basically we will probably start submitting the Class M now. Yeah. And then, so that we hit the ground running once we complete. And then basically what we will then do is start that work. And then while that work is continuing, we'll start looking for a tenant because, that might take, a while to find one, but, you can start looking for a tenant and tell them it's available on this particular date. But the shop in itself is actually structurally quite good. And like in terms of the creating a shop at a flat at the back, there's some stud walls, but it pretty much is a shell. The stud walls at the back would be quite easy to kind of get down and to kind of create that sort of 2-bed flat at the back.
So just to clarify,
TV needs to cover the cost, really, isn't it?
Yeah. So just to clarify, Sabina, what Prash done was an investment valuation. So what it would be worth to you. So obviously, once it's tenanted, you get the 6% or 7%. The bank is only going to value it on bricks and mortar. They're not going to do 6 or 7% if it's a vacant unit.
Yeah.
Yeah. So that's
my
yes. Yes.
So
in Epsom, the shop with the upper that was on at 525. It used to be on at 6, and they reduced it, and at 5 their sales fell through a few times, and then it was on at 525. I couldn't even get it to stack. There was no Class M opportunity on that, and the flats were already there upstairs, so there wasn't. The only potential you had was to go in the loft. So how much value add would you do?
Sabina,
yeah.
Sorry, is it all right if we just let Faz continue with his presentation?
Sorry.
We can touch this at the end, if that's all right.
Actually, I was going to say, I think really what you're talking about is a strategy. The strategy. So that's really a conversation for another time. But yeah, that's fair enough.
All right, the end.
Okay. So yeah, I think just relating that to here is that we've kind of based our numbers more on the residential than on the commercial, to make sure it stacks there. And then, once you bring the commercial component in, hopefully it should be a little bit better. Okay, so I've got some 2-bed, and I take that on board, Carly, that we just need to have more listings showing the flats above shops. Okay, so some more comparables on the studios and 1-beds. And we've got some for 2-beds as well. Here we go. So we've got some above retail premises in terms of rentals. Okay, so what are we looking at in terms of our high-level calculations? Just put this to the side. So we're looking at a couple of different profit angles. I can't see the top of this, so hopefully you can. So we've got 2 profit angles here. Just bear with me for a moment. Yeah, so the preferable one would be to go with the 1 2-bed and the 2 1-beds. So 1 2-bed with Class M in the back, and the 2 1-beds upstairs, including the loft space, and 1 small shop. So what we've done is we've minus the build cost, so we're allowing 80,000 for the build cost within that area, minus some contingency, professional fees, estate agents fees, and legal fees. Now, some of these, depending on which exit strategy that we go with, it will kind of differ the cost. So that's essentially how we've arrived at the end figure. So we're looking at a subtotal when we take all of those away at 384. So a residual value of 285.
What is your developer's profit percentage?
41%.
So, yeah, 41.
Okay.
Yeah. So we're looking at 41% on the best option on option 1, essentially, and then 19% on option 2. So Option 2 would be essentially having 2 studios in the back, 2 1-bedrooms at the top and 1 small shop. So it works out better essentially if we have the 2-bedroom apartment with Class M in the back. So essentially, once you've taken those away, including stamp duty and purchase costs, we came to a figure of 250. So essentially, what they were asking for, so we can make it stack on their asking price, which is what we've gone back with, and that has been accepted. So that's where we are at the moment, and then we've got to proceed from there.
Okay. How long was it on the market first?
So this came on the market probably before Christmas. That's when it started getting advertised, and I think it kind of slowed down after that.
So just recently,
Well, yeah, not too long ago. Yeah.
Yeah, I mean, one of the things about this one that, you know, it basically, because of COVID, they weren't allowing viewings. So they just basically did one day of full viewings where they had like literally probably about 10 people go to view it. And then they gave, you know, it's kind of like that best and final offer, if you like. And you had to have proof of funds with your offer. You had to like follow certain procedures in order to sort of secure it. So, you know, from that perspective, it wasn't on the market for a long time. So it was about a month. But, you know, there was quite a bit of competition for it. So there was about, you know, 3 or 4 of those people that went to see it were basically investors. And there were a couple of like owner occupiers that were looking at it. And we sort of deliberated whether we offer lower than the asking price. But then it's kind of like, you know, you've only got one shot. So we didn't want to offer, you know, 240, for example, and lose it for like, you know, 5 grand or 10 grand.
Oh, right, I see. It was sealed bids, was it?
Yeah.
All right. And you went in at the asking price and got it?
Yeah, that's what we just thought. But I think, but the thing is that basically we were the last bid to go in. And I think part of it was that they were real sticklers for following the protocol. So, you know, they basically requested the offer goes in, you have to have proof of funds. If you don't have proof of funds, that kind of, I think, went against you. So basically we were the last because we had to get, you know, like the proof of funds together. And that's probably one of the learnings I think Faz will, you know, will touch on in a minute. In terms of, you know, your bridging and the finance element of it, and kind of, you know, especially in COVID, you need to give a lot of extra time. But I think that, you know, I was sort of talking to the agent because what I didn't want to do was that window closed on us before we could actually get enough offer into them. So I was sort of kept talking to the agent, and he was saying that, you know, a couple of people put in their bids without putting proof of funds. And he was like, well, one said, you know, you can get proof of funds from my accountant. And he's like, I'm not going to do that. So you have to follow the process.
Yeah. Okay. And was it just the deposit you had to provide proof of funds, or the whole thing?
The whole thing.
So but you have to have bridging in place then?
You can have a, so essentially what they wanted was an offer in principle and, you know, showing your proof of funds in terms of your deposit. So they wanted a combination of that. So the learnings essentially were here that, you know, if you've got your ducks lined up, you're in a much stronger position to move forward, because, you know, there ended up to be a few complications in getting that. So there was a lot of phone calls for myself to get onto some financiers. And you know, a lot of them were really busy at the moment, and it was hard to get that feedback straight away. So if you've got that information to hand, you can pretty much put offers in a lot quicker, and maybe even, you know, put them in a bit stronger if you want to, and have a time to negotiate.
That's a good learning.
Yeah, I mean, I think basically, you know, I think for me, 2 things came out of it. Firstly, you know, with a lot of these, you know, sort of bridging and stuff, it depends on who you go with, but it can take longer than you anticipate. So if you are looking to put in an offer, you need to, when you start seriously looking at a site, you need to start working on your bridging straight away, right? Firstly. Secondly, I do think that, you know, basically you need to kind of, when you put in an offer, I think put your best foot forward. So, you know, we followed protocol. We actually did use Ranjan's letter. So we kind of did, you know, the letter background on us. I think, so I do think that all those things went like in our favor. We followed their process. We did exactly what it said on the tin. We, you know, provided the funds, we gave the offer, we gave background on us, you know, and I think that just made it credible. So, you know, and that's why it was accepted. And also because we were the last offer to go in, I also think that's why it got accepted, because all the offers were being forwarded as soon as they were received. So she'd kind of already looked at them. Then our one came in. We were the last ones, like, you know, to put in an offer from everyone that had gone. So then, you know, she was able to make a decision quickly. So, you know, the price accepted was 250. The price per square foot was 277. The build costs, now we went in at 80 grand purely really because I think firstly in that area, you know, it's not in London. Also the actual the 3-bed flat already exists, so it is subdividing that and possibly going into the roof space, you know, and then the 2-bed on the ground floor, it really, what you mostly have to consider is kind of putting up the new walls, the utilities, the cabling, soundproofing, and like then more your fixtures and fittings, because actually like a lot of it's already got a kitchen there. Like how the back is laid out, it could already be a flat, you know, and so you've already got it very segregated from the floor plate as it stands. So we put it at 80 grand. I don't think it will actually be that high, but I'm due to go back, and basically I will go back with an architect and a builder to basically you know, take another look as well.
Excellent.
So one of the questions probably on that ground floor is, if I just go back to where we've got that entrance, so natural light is going to be one of the things. So hopefully we're going to have a chat with the architect and to see if this can be done. Then maybe put some requirement for windows on the side. How we provide privacy to the other side will probably be the thing that that might be the sticking point. I don't know, maybe the architect will be able to respond back to us. So if you look on the left hand side, that's where, and correct me if I'm wrong, Elena, the entrance would be for the ground floor flat.
The ground floor is going to be, oh yeah, on the left hand side, yeah, sorry, so
on the left hand side, yeah, where you've got those stairs.
Yeah, so basically just to kind of explain a little bit, so the shop next door is a solicitor's office, that they go through this front door on the left hand side. The staircase that goes up is to the flats on the uppers. The door on the right is to that storage. Now basically that storage is currently blocked off, so where the picture you've got the green carpet, that wall there, you basically knock that down and then that will open up into this storage space. So what we would do is take that storage space back, knock this stud wall down, and then basically open it up into a much bigger area, basically. So that would all then be open, and then you just go further back and that opens up itself, which we haven't got a picture of on here, but that's like one of the rooms there that you can see, and there's sort of several others as well. And this alleyway, basically, you know, we would be planning to punch in some windows on the side here, and then do roof wells on the first floor, on the roof, basically.
So how big is the storage area?
300 square foot.
300 square, and that's what you're going to create the flat out of.
Not only, that's part of So basically, Faz, I'm just trying to think in terms of the pictures.
Because you said the retail is 375. So how much have you got to play with to create the flats at the back on class M?
So we basically can do basically the 61 for a 2-bed.
I've got a question here. Just going back a step on terms of the financing, Faz and Elena. Did you guys use a broker to find that, or was it just?
So I jumped around a couple of different places. Brickflow was one of the options, or one of the people that I spoke with. They were pretty good at coming back. Essentially, what they wanted to see was the deal pack, and all the details within that. There was a bit of a retainer that they require for the deal to be put forward to their investors. But there were a couple that they could target. Now the other one was my broker, and I used Akil from Ranjan's, and he's pretty good. He's quite quick at coming back, but even himself, he was quite busy in getting those numbers back. So he again he would have come back to me, but eventually we just found an option of presenting that the figures through cash. So that's how we went back to the agent.
Right. Okay. Thanks a lot.
How much was Brickflow's retainer?
So they wanted there was about £900, sorry, from Brickflow to go forward with that deal. Now, if you look at a comparison, if you're going with a broker, most brokers are going to charge, they have a tiered fee. So they'll charge 300 for around the 300 mark for just to get your decision in principle. And once you've got your decision in principle, once your finance has gone through, there's another £300, and then they get another amount from the financiers, the lenders as well. With Brickflow, it was slightly different. There was a higher amount up front, and I can't remember if there was another amount once the deal goes through. So there's just that to keep in mind.
Yeah,
can I just?
Sorry. Yeah. Just on the figures, Faz. I mean, I don't want to put a downer on it, but when you were going through the gross development costs and the actual profit in this, there seemed to be a massive difference between option 1 and option 2. I think you had about a £200,000 difference in the gross development cost. If you went back to that slide, one was 600, the other one was 400.
Yep.
So
the slide that you're looking at now, hopefully.
Yeah. So if we look at the gross development costs, 643 versus 448, and the only difference between the two options is you're having a 2-bed on the ground floor, is what I understand, and for the first option, rather than the second option was having 2 studios. I mean, are you sure you got the maths there right on the difference between the two options? Because did we say the 2-bed you were thinking, maybe 250, 280 for a 2-bed, which sounds
that's right.
Which sounds maybe a lot for behind the shop, but even so. But then the studios, didn't we say around 100 each?
I think were they less than 100? I can't remember. Let's see.
The studios were. I'll show you.
1 to 150, I think.
Yeah, it's about 1 to 150.
Yeah. So
there we go. Yeah, so 100 to 115.
Yeah, so 2 of those is 200, and the 2-bed we're saying is maximum 280. So I make, that's a difference of 80. Being optimistic.
I
you have a difference of 200 somehow.
Yep.
I think actually on the 2-beds where we went with because of the recent sales in the area were 280 on those 2-beds.
Yeah.
So
I'm agreeing. Yeah, but I'm just looking at the maths of it.
Yeah. Okay.
The only difference is.
That's a good point.
Do you know what the thing is? I sort of tweaked some of these numbers. Maybe I didn't do that second column. I might have.
Yes. I mean, like you're
that's
still
a good
showing
point, though.
I mean, it's only a maths. It's only maths because, The 41 is probably not realistic.
You said it's only maths. It's crucial. No,
no, it's
out.
crucial. Yeah, but I'm only bringing up the point on getting. Like, if it was 30, even if it was 30%, still.
I've got a quick question about the light to the daylight. You said you were going to punch a few windows.
Yeah.
Can we have a look at those photos again?
Go to the front slide there, Faz. And then on that
So
front,
this is the front. This is the absolute front.
Okay.
So it gives you an idea of where the building's at.
So basically, it's kind of the third one in. So you've got the alleyway. Now, where the grey bit of the roof is, you could basically punch in light wells, roof lights along there, and then on the alleyway as well.
Okay.
Essentially.
I think you're going to have a lot of problems with the daylight from windows because they don't like to use roof lights. I've gone through this whole process, and we've had this issue with windows, and I think the windows in the alley they're not even going to look at and count towards the daylight. Personally, you see where the grey bit is? There's a tree there, or is it just a building covered in weed?
Do you know?
See if you go the whole way down the back of the alley.
It looks like a tree because if you look on the picture on the right hand side, there's a tree that is coming out. That's what it looks like to me. There's a couple of trees there. So
if you were to go 2-3 buildings to the left, there's another alley that leads onto a building with roof lights. What's in there?
That's next to the solicitors.
Is it residential?
I'll have to check. So one of the things about Southend, and that, you know, I found like there's a couple of places where they've actually converted the whole envelope. So we may try for that as well, to kind of try and potentially convert all of it if we can. But I think the kind of the safe play is the Class M at the back. But they've been.
No, but you asked the question: Is it residential?
I'll need to check.
Do you know what I would maybe suggest? Because I think you're definitely going to have problems getting light into the back. I'd maybe look at demolishing or creating a light well in that grey section. So you're basically cutting a chunk out, a square rectangle, creating a little courtyard type area. That way you'll be able to get a lot more light into the building. Just a suggestion anyway, but I think just because that alley, it'll be good to get the windows in, but they're not going to look at it as they're not going to use it for their calculations when it comes down to adequate natural light, I think.
Have you guys spoken to a planning consultant?
So basically I'm going to take someone with me.
Oh, right. So you haven't spoken to a planning consultant yet?
I've spoken high level, but they have not done like a desktop assessment of it.
Okay, all right.
I've spoken to
so
them.
They'll give you a better idea of regards to the natural light requirements and so forth. And that, but
I've also spoken to any of the local commercial agents around there to see what demand there's going to be for the commercial space, because I've just gone through the Google Street View and you can actually click back through the years, and over the last 12 years that shop has changed hands about 5 times. So I'm just wondering how good the commercial strength is in that area.
Yeah, I mean there seems to be quite a few, like, you know, in terms of you know, that area. I think that there are, you know, that particular shop, interestingly enough, we've seen it go through. We would be looking for a smaller, like, independent. So I think kind of part of the problem with this particular shop is actually it's really quite a long shop, and I just think kind of, you know, from that sort of element of it, it's probably just not found the right tenant there. But you know, I think I mean there seems to be good demand from the agents that I've spoken to. So
how is it for parking as well?
So there's so sort of some of the streets around there you can park. They've got like areas where they just have like white bays effectively, where you can just like then sort of park. So I sort of parked just down on sort of side streets.
Can I ask as well, when you said in your plan about, oh, you use the roof space for the one beds that are going to be on the first floor. I mean, when you say using the roof space, is that making a proper dormer? In which case I would expect the cost to be much higher. Or is it just trying to get headroom in the existing roof space and not doing anything with, you know, supporting the floors, and you're just basically leaving the profile as is and hoping you can get some livable space up there?
So what we look to do is basically go into the loft space and basically look to sort of to subdivide that 3-bed and make it into sort of 2 1-beds. We would need to determine, like, you know, whether the roof space went into like one flat and then you kind of had like just a sort of a bigger area for the other flat. But that will be kind of done. So part of this whole process with COVID, what's been a challenge here is that we were only able to see the ground floor unit, put in an offer, then basically they arrange a viewing for you to go and see the uppers. So really at that point, we could still back out if, for example, you know, we found something that, you know, was not made our deal not work or not viable, because you know, our offer was based on without seeing the uppers. So we could also adjust our offer as well if we found something, which is why when I go there next, I'm taking a builder and basically an architect / planner.
Yeah, because like, I'm sure we all see this all the time, where yes, you've got roof space, an attic, it's a possibility, but I'm just wondering whether or not, when people sort of see that as a possibility, do you actually have to start thinking about floor RSJ support, even if you're not actually putting out a dormer? Or can you actually have a proper room up there, even though you're just basically putting the floor on an existing 4x2 joist that have been there since the build? Build. And like, otherwise the costs are completely different. You know, the people now won't do lofts. You know, you're talking about 50. Is 50K cheap? Probably is.
No,
I don't know. I think that's a lot.
So basically what Pedro's saying is, have you taken into consideration the additional cost to go up in the roof? To strengthen floor joists, etc., and so forth.
Yes.
But and do people expect to be able to get away without strengthening floor joists if you don't change? If you're not changing the roof profile, is it acceptable?
No, it's impossible. It's impossible.
Yeah.
No, you would have
I think with this one it's around 30 to 45,000 if you want to convert.
Yeah, I think it would be more around 30K to convert.
I think the good thing is here is that your profit margins are huge. So even if that is the case, you're working at 40%, you know, not going to have a 10% off that to cover all these extra costs. You're still in the green. So, you know.
Can you go back to your numbers page, please, Faz?
Yep.
So with regard to the roof structure, until you actually physically get up there and see what the are like, you haven't got a clue whether that's a goer or not.
Yeah.
Not necessarily the floors, it's the whole roof structure and support. So you may have to change everything, or it may just be a no-go.
Agreed. I mean, basically, the thing is that already there's a 3-bed that's there, right? So, you know, and a worst case scenario is that we refresh the flat and we, you know, or we even just create that into, you know, 2 studios. Like, you know, it doesn't necessarily need to be 2 1-beds. You know, the plan would be to go into the loft if that makes sense. But until we actually go up into the loft, we still, you know, that is, you know, like kind of our plan A. However, that may be subject to change after going to see it.
What are 3-beds going for? 3-bed flats?
So, do you know, the part of the problem is there is not that much demand for the 3-beds.
Yeah.
And that's part of the problem, because I think, you know, if you're going to be living in a 3-bed, kind of go and get your own sort of flat rather than living above a shop, you know.
Yeah, it's true. Normally they would do it, rent it out room by room if it's 3 bed above a shop, isn't it? Yeah. So what I wanted to ask, you see on these figures, you know, on your second case scenario, so profit number 2, so where you've got the profit would be 85,000. What percentage of developers' profit would that be?
19.
19.
Yeah.
Okay. And would you be happy with that if you had to resort to the second case scenario?
You know, I mean, I think that, you know, at the end of the day, you know, I do think that, you know, we would obviously like to make as much as possible, but, you know, I mean, 20% is still a good number, you know, especially for a first project. Ideally, we'd like to make more. So, you know, just we do obviously the best we can to kind of, you know, keep the costs down and make as much profit. You know, a lot of it's still kind of, you know, basically, you know, in terms of like, if we decided to keep, then there wouldn't be the agent fees in there. You know, there's certain things, if, you know, the finance costs may not be,
sure.
So there's still kind of some wiggle room around those numbers.
Yeah.
But by and large,
and remember about if you take a mortgage, you know, the bridge for the bridge companies, it's minimum 20% what they want, so 20% profit. Yeah.
I'll tell you what I was surprised at. You know, like you said, there was like 10 people that went to view it on the same day. So there was a lot of interest. Yeah. And you've got 41% developers profit. I would have thought that you'd have been a bit scared of the competition and would have offered a bit higher than the asking price because you got so much profit on that.
Do you know what? The thing is, you know, for me, and I just think because I've been assessing a lot of deals and I've seen a lot of deals, I've gone to like loads of viewings. I actually, when it gets above asking, I just find that that's just too much. I'd prefer to just walk away and find another deal. I just don't really want to engage in that.
Right. Okay. So even though it was sealed bids and you had so many people viewing it and interest.
You know what? Here was the thing. I would prefer to put together a more compelling offer, right? So in that, one, putting together, you know, their offer price, which is what they want to sell it at. 2, following their protocol, providing the proof of funds as they've requested, putting in basically a cash offer, and then also, you know, basically with a good offer letter, background on all of us, who we are, credible, professional people. That to me, I would hope would stand and stack up against the rest. And I think that's what happened in this instance.
Yeah, I think that's why you won it, because I think a lot of people, they couldn't come up with the proof of funds, and that's why you was in there. Yeah,
that's it. That's exactly it.
You also offered them what they're asking, of course.
Exactly. You know, but that's not, you know, the thing is that I've heard of so many that I've gone to view, and you know, they've paid multiples of the actual asking price.
I know.
It's ridiculous. Some of these bank sites, right? They're on for like, you know, they go for like sometimes 100 grand more. You know, it's ridiculous.
Well, and
what they're using it for.
£177,000 over asking price.
It's probably Rengen.
Outside his geographical area.
It depends what they're using it for. If the building's suited to a business that that they can go in and start trading, and they really like it, they're more than happy to pay more than the asking. You know, their view is going to be different to ours, where we're going in to try and make money, and others are looking for a perfect spot. So I think some people just don't mind paying a premium if it's right for them. You can't compete with that either.
You know, I mean, to give you an idea, Carly, right? I was looking at another site, and basically they were looking at, and this was priced at 350, and it was actually a shop that had that as well. And literally the agent basically said to me, unless I was willing to submit a cash offer for asking price or more, to not even bother. That's what I was told. And apparently they had like a ream of of offers that were all cash offers, right, at asking or more. Yeah. And I actually touched base with them today to see if it was still available, and they were like, it went for multiples of the asking price.
Oh.
Have you actually thought about the practicalities of building this out? Because the road you're on is the A13. It's the major trunk route into Southend. You know, there's no way you'll even get a skip out the front. So everything would have to be handballed in from a side street.
That's why these things are good, you know, so all these things you can have something to think about. Well,
the next site visit I have, I'm going with a builder. So, you know, hopefully he will raise any of those questions.
And I'd definitely go out the back and into the back area and see whether you can create some sort of light well courtyard type area, and see what the construction is, see if it's brick built or if it's concrete, or you know, those sort of things. Just make sure he double checks all that. Asbestos will be another thing that you might want to look into too.
You know, you said it's an hour away from London. Is that driving or train?
Driving.
So train, it's even quicker.
I may well be. I don't know. I'll have to check.
That's amazing for that sort of price for just an hour from London.
I mean,
it's about 45 minutes of Venture Street.
It'd be a bit more than an hour. Unless you're already in East London along the A13, it's going to be a bit more than an hour.
It depends where you live. I live in North London. It takes me an hour. So it depends on where you are, I guess. But that's part, and I think if you're in North London, it's why Southend is actually quite a good shout, in a sense that a lot of people from London actually have holiday homes there, because you've got the beach there. You know, it's not too far to go. I mean, even like last year in June, so we came out of lockdown, and I actually went there with the kids for the day. You know, it's just like nice to just kind of get away. There's a bit of a beach, you know. Depends on, you know, but there are some like nice areas there.
It's 500 meters from the site to Southend East, using the measuring tools on Nimbus maps.
So how much was it? Sorry.
500 meters from the site to Southend East train station, which is then on the train line all the way into Fenchurch Street.
Okay, good.
Guys, have you checked to see if there was any Class M applications within that area?
Yeah, there are. I mean, there's and there is also some in there that I've said they've done like they've converted the whole envelope, like some of the A2s in there and stuff like that. So
is there any recent ones or ones that you can look at to see what feedback was given if it was refused?
I'll have to probably do a bit more research on that.
Yeah. Have a look, because it's always good to know what the planning officer that looks after those in that area are like because what we found is that this one planning officer always pulled up adequate natural light. That was his thing. If it doesn't have that, it's gonna be refused.
Yeah.
So it's good to look at nearby applications.
Yeah, I mean, the thing is, you can also get the report done about, you know, the kind of the adequate natural light, and see what can be done on there.
Yeah.
But I do think that, you know, we're on that sort of the grey roof. You are able to basically punch in, I think, some kind of roof lights along there, or, you know, that's basically what I think we would do. Pretty much similar to that the neighbour.
Yeah, you could do anything, but do you remember Ranjan was saying it won't be just a roof light isn't enough for a bedroom?
No, but we'll get some on the side wall as well. So it's not just going to be on the roof light. So there'll be.
That's if they allow it, Elena. So just check with your builder.
Yeah.
The other thing you need to check is when you are looking at the comparable Class M's that's been done before. Remember the adequate natural daylight only came out last year at a certain date. So check if they were done before that time or after, because if it was done before, the regime wasn't so strict.
Okay.
Oh, another thing might be worth looking at is cycle storage bins, all of those sort of bits. Not that it will get refused, but it will be good to have all that organised. How are you going to do it?
Yeah, because you're contemplating 4 flats, so yeah, they will look at all that sort of thing.
Excellent, exciting.
Yeah, this was a really good one to chew the fat. There's lots of, you know, nuances in that. So a really good one to learn from. So thank you guys for presenting that.
Elena, the train times are 1 hour and 2 minutes. South End to Fenchurch Street.
Okay,
great.
So it's commutable then.
Yeah, I mean, you do get that. I mean, when I used to work in the city, I used to have people that would commute in from Brighton every day. You know, people do long queues. I mean, like one guy, I know he used to actually commute 2 hours a day. I personally wouldn't, but
that's half a day return, isn't it?
But you know, he would work on his train ride in and he'd work on his train ride out. So, you know, it depends on, you know, what you're used to, really.
Thank you so much, everybody.
Is there anything else?
Yeah, that was a good one. Thank you. Both of them were really good.
Yeah, thank you guys.
All the
best. Brilliant session as usual, Elena. Well done.
Okay, thank you very much.
All right, guys. Thanks a lot.
Cheers, guys.
Good night. Have a good night.
Bye. Bye-bye.
Bye.
Bye, everyone.
Bye.
Bye.